Dă-te pământ.
How we doing, guys?
Hi.
Can you all hear me?
Yeah, fine. Yeah.
How we doing? All right.
Hello,
Good.
Hayden.
Who we got on?
Doing well. 23 so far.
Oh, I reckon we can go for more than that, mate. Has everyone's day been?
Busy. Trading, actually.
Busy testing.
No, and live trading also. It was good.
What did you take?
It was good. I took EJ. That was a win, a full win. And USD would have been like stopped out with the management, but I got wicked out. And then I figured out from the community that if there's a wick, that wicks usually are mitigated. And my stop
Usually mitigated, yeah.
Yeah, there was a wick.
I did see that. Was that not on AU?
AU, yeah, AU.
Yeah, to be fair, mate, I forward tested the exact same trade as that, but on the 2 minute. So my entry would have been a little bit higher. And my stop loss was just above the wick. So I was still in that trade, but if I would have taken it in the live markets, it would have been taken out for a break even. It was quite a low probable trade, just purely because it was in the middle of an Asian range. There was a little bit of inefficiency, no real liquidity behind the entry, but it was definitely still a valid trade, mate. Yeah.
So what you said, let me see, where was it? What, in the middle of an Asian range?
Yeah. The 15-minute order block, if we're talking about the same position, was in the middle of the Asian session range.
Oh yeah. Okay, I didn't see it that way. Shit.
Yeah, I mean, to be honest with you, it's, you know, if before I came across the Asian session range, it wouldn't have made a difference. But I don't really, if I look back at sort of my trades that I take, they're usually just above or below.
Yeah. So just stay out of in the middle of that price in a way. Yeah.
I forward tested that setup, so I've seen the same setup. I've seen the breaker structure. I've seen that we tapped into the 15-minute AOI, and we had a nice breaker structure and confirmation entry, but it just wasn't the most high probability trade because of the wick and the fact of where the order block was. Because there's also quite a lot of inefficiency and an area of interest quite higher above that. If you look, there's another order block as well, isn't there?
Yeah.
So,
I noted that on the charts. Correct. Okay.
But you're seeing it, mate. You know, you're seeing it. That's it's good that you spotted it, because it's definitely.
Oh no, I saw it. I just considered it still like because I take the order block closer to the breakup structure. I don't have like my trades like split into like valid versus high probability versus low, or that was actually what I was telling Andy. Like I'm trying to add stuff. Like this is a good one to add, because I start seeing trades more and more, because I get the I get the hang of the strategy, and I start seeing breakup structure with imbalance and equal lows everywhere. So I need to like narrow down.
Yeah, it's all about building that checklist. And I think that the more that you back test and you look at your winning trades, you'll start to notice patterns. So you'll be looking at, for example, all of your winners might have like a breaker structure that breaks 2 levels of structure and leaves in balance, whereas maybe your 1 minute confirmation entries that just break 1 level of structure don't play as well. So it's all about building what is and what means high probability to yourself. And you know, the more you back test and the more you are in the live markets, the more you'll be able to sort of build that picture yourself on what is high probability and what is a valid and what is a no trade sort of thing.
Correct. Yeah. All right. And
help looking suave in your glasses, mate.
Huh? Oh,
Albert's give me the finger.
And like, would this be a valid rule to add? Like, if an order block is in the middle of the Asian price range, to like stay out, for example. When
if you want my honest answer, I don't know.
Okay.
Because, like I said, I've been. You drinking wine?
Mm-hmm.
God, you're making me want to go and get a glass. I've got a bottle downstairs
Yeah, no,
myself.
yeah. I'm from an area of Romania that's really good. It's really known for the red wine, and it's 3 p.m. It's not at 1 p.m. for me, so it's a bit later for me.
Doesn't matter if it's 10 a.m. where I'm from, mate.
I lived where you're from for 8 years. So
Yeah,
I
yeah.
know, I know. I used to drink beer at like 8 in the morning with like some old women in the Weatherspoons.
Oh, good lad. My type of guy. My type of guy. It was. We got. How many we got on there?
41, mate. It's a few.
41.
Go down,
Right.
all right?
Who's that speaking?
It's me, mate. Sam.
Oh, hello. What's up, mate? I don't know you as Sam anymore. You're just a sketchy guy, ain't you?
I'm just a sketchy fucker, mate. That's it.
Yeah, yeah. I'm good, mate. How you doing? All right.
Yeah, I'm all right, brother. Not too bad. Not too bad.
Hey Sam,
Good.
Hey, man. How you doing? You all right?
you good? I am your video on the order flow on the lower time frame is next on my list as soon as this meeting is over.
Good, man. Hopefully it adds some value, mate.
Yeah. What is it? Is it about like the same process on like the higher time frame, but narrowed down to how the lower time frames work?
Well, yeah, exactly. Mainly it's about how to read the 1 minute, because like a lot of times I see people trying to get in on like the first tiny break of structure, which isn't necessarily the safest entry you could have. And B, then thinking that the trade's just gone and that there's no entry left on it, which there always is. You know,
That's a great point. Yeah.
If it's a true move, the way order flow works, the large institutions will need to build a position to continue to push price. So they'll have to come back and there'll be like a series of mitigations and liquidity grabs and stuff like that. So it's more about reading that than just sort of going for a tiny little break of structure and saying, okay, well, I'm in now, like just see what happens. You can get safer entries basically, and you can get high probability entries. It's just about knowing and reading sort of what structure and liquidity is telling you at those points.
When it comes to this thing, like when it comes just to the 1 minute, like for example, I took 3 live trades so far. It went well. Doesn't matter. I back tested it. It's okay. But it's just that that hesitation or that nervousness is like, oh my God, there's some imbalance underneath. Should I take the order block closest to the breakup structure on the 1 minute, or should I?
Well, that's it, mate. I mean, the problem with the 1 minute, right, is that structure generally isn't the clearest. You know, it's more subjective, and it's more, you need to notice the really fine details to trade it really well. Like you need to notice where there's resting liquidity. You need to notice which points of structure actually matter, because they're not all going to matter. You know, it's more essentially you want like a 5 minute break of structure, but you want to be able to read that on the 1 minute, if you see what I mean. And then the reason I use the minute more than anything else is to really refine entries, because when you get good at reading it, you should be able to pick the single point that price will turn around, and that will give you a smaller stop than say if you were using the 5 minute or something like that. Which is the whole point of it. But it is more tricky to read, and people do generally take more losses on it because it is that much more subjective. You know, like a break of structure on the 1 minute could just be organic. Like it might not be caused by an institution as such, right? So like the way I like to look at it is more the swing highs and the swing lows, basically. And when those are getting broken, because that's when the sort of true intent of the large institution just is shown. Because to break like a swing high or a swing low costs an awful lot of money, right? Like that, you know, you're talking hundreds of millions, if not billions, to break those points in structure. So generally speaking, the large institutions will then protect their positions. They won't want you know, they've completed their objective of getting their positions out of drawdown that they use to hedge that to generate liquidity. And then they won't want anyone getting in at a better price than them. So they'll protect those lows that are really important. And it's learning to read which one of those lows or highs is really important, basically.
Yeah. I am mentally not from the market yet, but mentally I'm trapped in the, I like the 1 hour, or I like the 4 hour, I like the 1 hour, I like the 15-minute. For me, in that point in time, I just want to get in that trade in any way, shape, or form. So, and I know that's wrong.
Yeah, I mean, mate, that's a recipe for losses. And I've done it. Like, I mean,
I said it.
Yeah, exactly, mate. I mean, I started initially when I first started with Phantom, I was very, you know, 4 hour order blocks, 1 hour order blocks, and that's it. And then I sort of went away from that to trying to trade just the 1 minute, which some people are great at. Like Niazi's a great example of it. He's brilliant at actually reading it. But for me, I could never. I was okay at it, but I could never really get it to work, and it messed with my psychology too much. So I've
done it myself, mate. Sam, I spent quite a lot of time just looking at scalping the 1 minute, and because I wasn't confident in the setups. I hadn't found sort of the style that I wanted to trade. Hadn't had my call with Ben. Hadn't watched through Eli's videos. I hadn't really found my way. So I was literally just using the same strategy, but purely on the 1 minute. So I'd wait for a break of structure, look for imbalance, and God, you'd be taking a hell of a lot of trades, and I'd still be risking like a quarter of a percent. But you know, you got the question you got to ask yourself is the longevity in that? Because I was severely stressed. I was on the charts for 10 hours a day, and that's not why I wanted to be a trader. So it's about what fits your personality, I suppose. Some people love it. For me, it's just entry.
Well, what I was saying, exactly. What I was saying is like I'm only talking about 1 minute, like pure entry. I don't look at anything else. Like if I don't know this, if the 1 hour and the M15 structure doesn't look how it's supposed to be, I'm not looking at anything. It's just from an entry point of view. I feel like I can see where price can go, and it will hit my 15-minute high. It's just that if you fuck up the entry, you can just be tagged out by like 3-4 pips, and then it goes into your direction, and you're like, what?
Yeah, of course, mate. Of course. Yeah. I mean, that's the whole sort of point of the video that I posted, is more focusing on when the trend has actually changed on the 1 minute and getting in then, right? Because you can trade. So let's put it this way: you can trade two different setups, right? You can trade continuations or you can trade reversals on any time frame, right? You can trade a 4 hour reversal, you can trade a 4 hour continuation, you can trade a 1 hour reversal, you can trade, and so on and so forth, right? But the best way to, or the most high probability way of trading, is to wait until all the time frames are aligned and then take a trade there. So the way I like to trade is, so for a reversal, I won't look at anything less than like a 4 hour order block, because I just don't find that they work out. For a continuation, I'll look at 1 hour blocks. But then I like the 1 minute to be, when it comes into that block, I like the trend to actually change, right? So you're trading then a 1 hour continuation along with a 1 minute continuation. And if the 1 minute is in a continuation, every time frame above it should theoretically be in a continuation as well.
Yeah.
If that makes sense.
Killing that 1 minute entry so you don't enter, and then it comes back down a little bit, tags you out, and then continues.
Exactly.
You're gonna be right. I mean, I'm saying you're gonna be right anyway, because your H1 and your H4 is in the same direction. It's just that, you know, if you want to have a tight stop loss, like I've never used 3 pip stop losses before or stuff like that. So, you know, within 3 pips, anything can happen.
Yeah, it can, mate. But if you're picking the right areas, it will be right. It's either valid or invalid. I mean, that's one of the bits I sort of say in my video, is that when I take a trade, I don't tend to give it a lot of buffer on the other side. Like I'll just give it spread, because I'm confident that where I take the trade from is the right point. And if it's wrong, I'm wrong. And that's fine.
That 1 minute.
Yeah, Exactly, right? Like there's, I want to see a couple of things. I want to see ideally a POI that's taken liquidity, that's an engulfing candle, that's a sponsored candle, something like that. There's a few different things that I look for. But they're all quite specific. And, me and Albert have put in an awful lot of work into this over the last, 3 weeks, something like that. Because we both went through the same journey. Like we both, we ended up trying to trade just the 1 minute. You end up taking a lot of losses. It's fine. The wins make up for the losses in this strategy, but it's not a great headspace to be in just going, I don't know whether this trade's going to work or not. I'd rather personally not sit through that, mate, and be happy risking, like properly risking sort of 0.75, 1%, something like that, and knowing that the trades are either valid or invalid and will work or won't work, and not wondering if they will or won't work. It's either yes or no, which is more of a space that I like to be in personally.
Is there such thing as a good loss?
Yeah, mate, 100%. Yeah, of course it is. Like, if you've done everything that has fit your plan, then all good, man. Then as long as you learn from it, it's fine. Like you just want to know.
Yeah.
You want to try and figure out why it went wrong.
Yeah.
Like I took a loss on AU yesterday, which was a great example of, something that fit my plan, but.
Is that the reversal one?
Back over it. Yeah, that's my new tick as well, mate. Yeah. Looking back over it, it could have been a better trade, and that's something that I'll learn from and sort of put into my plan in the future if it keeps happening. And
Sketchy, can I ask you something, mate?
Sorry, mate.
Can I ask you something, please?
Yeah, fire away, buddy.
I was just wondering, do you know, and it's not just specifically for you, like other people could answer this as well, but I was just wondering, like I'm just tweaking my plan and stuff out and just improving it as like the days go by and stuff, and I was just wondering, like, how do people have the plan structured? Like, do they have it on one page? Do they have like a checklist first, what they go through? Like, I was just wondering what other people's plans are like and just how they sort of structure it, you know what I mean?
Yeah, mate. So I structure mine, like the first bit in mine is like risk management, because I think it's, apart from mindset, I think risk management is the single most important thing in trading. It's not necessarily how much money you make, it's how much money you can keep. Then I have sort of a run through of the various sort of POIs that I look for. Then I have some examples of the entry sort of things that I look for, like actual pictures of charts with the PA that I want to see on them and some drawings that I've done of, exactly what I want to see. And then I have like a little entry checklist that I sort of tick every single time as well.
So is your plan on your computer?
Yeah, it's all on Notion, mate. I keep all of my trading stuff on Notion personally.
Right.
I think quite a few.
That's the same with me, buddy. I'm pretty much exactly the same as Sam. I've got mine's all on Notion. The first thing is risk management, my percentages, very detailed to use Steno app. Also how much I want exposed at any one time. Then I've got a little bit just about the strategy concepts. Then I've got some diagrams which I've drawn on TradingView. I've also got some of my winning trades, which are continuations, which are reversals. I've then got look at mine now. I've then got some stuff on some market conditions, just to see if we're in a corrective market, a ranging market, or whether we're in a trending market. I've then got some stuff on management. So, for example, if I'm entering on the 1 minute, then I can manage on the 1 minute. Times that I trade. Then I've got my checklist rules, which are the questions I ask myself before I even execute. So, have we got inefficiency? Have we broke structure once or twice? Have we tapped into an AOI? Have we swept Asia lows, etc., etc.? Then I've also got some trade plan rules, which is just like simple things like do not cut trade short, let the R keep you consistent, don't have FOMO. If it goes without you, you've followed your plan. Don't watch your trades consistently. And then also got some psychology quotes, which I've put at the bottom. You can have it as detailed or as bleak as you want. it's whatever works for you. But I find having I've also got a printed copy as well, a laminated copy, so I can have it next to me and flick through every single morning just to sort of make sure it's digged into your subconscious.
Yeah. Right, no bother. Thank you, mate. I really appreciate that. Like.
Yeah, no worries, man.
No worries, mate. No worries.
Um,
Dear said,
yeah, I mean, does anyone have any sort of specific questions they want answering or anything like that?
Yeah, well,
Hello, Timothy. How are you?
all right, Timmy.
yo, boys, how you doing?
Good, mate. Good. You?
Yeah, not bad. Just on my way back home now, so just on the phone at the moment.
Oh, nice. Nice.
Careful driving, mate.
Don't zoom and drive.
I'm not driving, I'm walking.
Oh.
Oh, right, fair
Riding,
play, fair play.
6'5" frame, taking giant leaps, right? Yeah, I mean, I guess like as sort of Dan said, man, this is just a bit of a sort of get together to just chat through some stuff. So literally, if anyone has any questions, I mean, me and Dan both trade in a bit of a different way. How do I use trading view in that? So I like I just use, if you right click on trading view when you're on there, you can set an alert. I set them normally about 15 pips away from a point of interest that I'm looking at, and when it triggers, I'll sort of jump on that chart and see what's happening, see whether the PA is doing what I want it to do and whether I've got an entry there, basically. And someone wants to go through some charts.
Yeah, I was gonna say something about the charts also. I have some screenshots of some not setups, but like how price action is, because basically, okay, so let me reframe the question. For how Dan, for example, trades, and Ben, and because I try to see if I can at least limit my trading for like the first part of the day at 6, 7, 8 a.m. when you wake up. The trade is basically almost already set up. You're just waiting for the price to come to your AOI. So you not already you already know from the first time you open the charts if you're going to be interested in EU or EJ or whichever one. It
Do you want me to answer that, mate? Or
sorry?
Do you want me to answer that, Sam? Or
yeah, I mean, I don't know how much different the Sam trades.
That's more your thing.
Yeah, I mean, personally, for me, I get up at 5:30 in the morning. Have a cup of tea, shower, and that. I'm on the charts with clean charts. 6 o'clock in the morning. I look on the 1 hour, see if we're trending, see if price action is clean. I'll go down to the 15-minute, mark all of my breaks of structure, mark up my AOIs, inefficiency, liquidities. Obviously look to see where we are or what we've done during Asia. So I'll be able to see pretty much straight away where there is a potential setup by about 6:30, because if we're coming towards my AOI and the bottom or the top of, let's say, for instance, Asia, then I'm on the charts ready to wait for that tap to fill the inefficiency, tap into my AOIs, and then look for an entry on the lower time frame. So some people like to do their analysis, for example, if you're trading a high time frame stuff, then obviously you're going to be looking at analysis maybe the night before. But me personally, it works for me. I like to start the day completely fresh. All my charts are completely wiped clean. Like, for example, I looked at the charts this morning, and to be honest, they looked ugly. I marked up a potential setup for EJ, and also for, I think it was, hang on, let me have a look 1 second.
That's the one I took. The EJ was in trending in all time frames. Like page 1 was doing higher highs and lows, and yeah, that was a win. But
see the GBP pairs for me, after that big gap, I haven't been interested. NU, I marked 2 areas of interest and liquidity, but no, there's nothing really that looked like clean price action. So unless it comes to you straight away, for me personally, then I'm not going to be interested. I'll just move on to the next pair.
Yeah. Oh, yeah. I don't know. Like, I do have like a chart that I can show you, but the thing is, it won't be relevant to you necessarily because it's not in your time zone. But I'm just imagining if you would actually see this in the morning. It's like I'm kind of scared like when the price drops towards the AOI very quickly, because I see equal like yeah my plan I was telling Andy in earlier. I feel like I can tell if I'm interested in getting into a trade like immediately. The only thing I'm waiting for is a confirmation entry. Like I don't have that many things in my trading plan that would keep me out of some trades. Like for example, this one with the Asian, the area of interest being in the middle of the Asian range. That's a good one. I never thought about that one. But like there are equal highs and equal lows everywhere. Because if you don't see it on the M15, if you zoom in on the M5 or M1, you'll still find some.
Mm-hmm.
So it's like my trading plan is like a bit too, even though it's meant
Aggressive.
for high probability setup, it lets me get into everything. Like I see imbalances and OBs everywhere.
The thing is, if you're I mean, this is just again me personally. If you're seeing immediate trades everywhere, that would say to me that they're probably not high probability. Again, that might be just me being wrong, because if you're with this strategy, there is entries and entries and entries everywhere, mate. Every breaker structure on any time frame, you can find an entry, but it's about back testing your plan, or back testing to build a plan to find what is high probability. Because I mean, I take between 0 and, well, I'll take minimal trades, whereas before I'd be taking between 5 and 10 trades a day, whereas now I probably take at max 2 a day, because usually one of the pairs that I trade during the times that I trade will present an entry. But it's about just trying to sort of maybe take a step back. I know everybody wants to get in the market, and seeing people on Discord, did anyone catch this? Did anyone catch this? I know it makes you think, oh, I don't want to get in that. I want to get in this. It can be a bit misleading, but you've got to just sort of focus on your own work and your own plan. Maybe just take a little time and sort of just really think, is this a high probability setup? Is it not? But that will come with time.
Yeah, I mean, I did make my trading plan in a way that looks for probability setups. Like that, like I don't look at anything that doesn't have equal highs or lows, like imbalance, or break a structure or stuff like that. But there are some like I don't even know. Would I be able to share an example of like a trade that technically fits my plan in from an M15 standpoint? Like if you imagine that the H1 is in the same way. It's just like the way the M15 was made. Like I don't know, like big impulse up, then created the higher the equal lows, and then coming back to the AOI is also like a big impulse down, and it becomes like an M shape.
You should be able to share your screen, mate.
Yeah.
I would guess.
Yep, it's all set up.
Yeah.
And you'd probably have to change the host or whatever.
Like, can you see my screen? Yeah.
Yep.
Yeah, like for example, up to like if I take the bar replay up to here, or actually even up to here. If this would be like 6 in the morning or something, like I see all of this imbalance here. It is a clear break of structure to the upside. Like even this, you could say the equal lows. If you zoom into the M5, you can see that there is equal lows here, which are now swept as we go into the order block. And for me right now, like I see this, the only thing this is where I'm probably going wrong, because I don't have anything in my plan that stops me from doing anything else. Like I'm just waiting to get in. Like there's nothing that stops me from looking, not to get in, but to look for a confirmation entry. Like I have my.
So where would your order block be?
So I would say that this is my 15-minute order block.
Hey.
This is like either this one or this one, but they're very similar. Where the impulse comes from.
Okay.
I would say that this is my I have inefficiency, the equals, and then I'll go on the 5-minute, refine it to the Now here, the reason why I didn't even look at this trade was the fact that I actually didn't know where to put it wasn't in my time anyway, but I didn't know where to refine the M5, which technically would be this one.
Sometimes you don't. I mean, sometimes you won't be able to find a refined 5-minute order block. Sometimes it'll be you might have too much choice. Sometimes it'll be the same size as your 15-minute. It's for me, it's not absolutely key, but like Ben said, sometimes you can just see a little bit of inefficiency between the 5-minute order block and the 15, which you can't see case, on the 15.
In this case, there's no inefficiency on the M5 that's clear. Is this one, but you would have to wait until here to tap into your M15 anyway.
Yeah.
In this case, but yeah, and now from here you just go into the 1 minute and see if there's a CE entry. But that's a different story. That's a different argument. Like for me, it was just like more from a like to prepare in a way. Like I'm in the morning and I have my 4 or 5 pairs. So far so good in the last 2 days. The EJ one that I saw this morning, it was just too beautiful, like this one here.
You sent me a couple of trades, and I think it was yesterday, and it was a really, really, really nice entry, mate. So you're progressing really well, mate.
I see these ones so often. It's like I want to be in the markets all the time, and I'm stopping myself, and I'm just looking at the prettiest ones. Like this one this morning. This is 7:30 in the morning right now in this particular case. Like super nice impulse, breakout structure, beautiful in like lows swept, and now I got in here, and it was a win this morning. No problem.
Do you want to draw your entry up so I can have a look?
Yeah, I actually have it. That was the breakout structure that made me put the order block. I don't do the equilibrium point yet. Like for my back testing, I missed a lot, and I'm just getting data in a way. I know that you put the equilibrium point, but yeah. Okay. And then it went, this was, I left this stop loss because I saw this inefficiency here. This is what I was telling Sam this earlier. Like it could have been an order block. But
I mean, definitely, it's a good order block you chose, because obviously you had 2 really nice bullish candles that broke structure impulsively. But I mean, I personally wouldn't have taken that, but you've done the right thing by having a bigger stop loss to cover that inefficiency.
Yeah, that I saw in some of Ben's examples where he just made the stop loss a bit bigger, and that was it.
Yeah.
But like,
why wouldn't you have took that down?
Sorry?
Why wouldn't you have took that down?
This one down?
What? Because I wouldn't have took that. I wouldn't have took that personally because of the inefficiency below, and I wouldn't have wanted a big stop loss.
Right.
I see that.
I would have probably chose. If you look at, do you see the green low test candle just underneath the red EMA?
Mm-hmm. This one.
That would have probably been my order block that I would have chose, because it left inefficiency, and it was, I suppose, at a discount sort of area really as well.
So do you mainly go for extremes then?
I don't really use extremes or no, really. I don't really think of them as extremes, but I wouldn't have taken that setup personally. My eyes wouldn't have seen it.
Yeah, that was when I saw some like examples, and I'm looking through trade recaps of Ben, and he always says that he chooses the order block closest to the breakup structure.
Yeah, I say that, but at the same time, the one below has inefficiency and it has equal lows resting above it as well.
Which ones?
This one here, man. I just annotated it quickly on the chart. So equal low.
But I wouldn't see that at that point.
It's still that's true, but then again,
I put the order here.
This is the thing. Like, I don't take like what I say too seriously, because although this is the candle before we break structure, you still have inefficiency resting down in these regions, and thoroughly there's still inefficiency down there to kind of be tapped into. So you could allow a larger stop loss. Yeah, by all means, that's fine. At the same time, as the market is creating opportunity as it's going, so it's still creating those equal lows right there, waiting to get tapped in anticipation of doing something like that.
Mm-hmm. Okay.
So sorry to step in, just want to let you know.
So,
really.
so technically, it was like it was just a less probability trade.
No, that's a high probability trade. It's equal lows. Just, did you sweep liquidity? Did it do anything or?
When yeah, but I mean, again, all of this is after I already put the order, so it's too late anyway.
No, it's all still within your overall area of interest on the 15-minute and 5-minute order block. So it's dependent. Like me personally, I would have been eyeing up this order block because there's still inefficiency down here.
Yeah, that's the same one I would be looking at too. Yeah.
We just didn't sweep it that far. We didn't get that. It literally just swept it a tiny bit.
Yeah, no, it didn't went upwards.
The move was there, Andre, for sure, man. That's how I would have looked at it anyway.
Yeah. I was actually saying, oh man, like I've seen some other examples of yours where you would take this one and you would just leave a bigger stop loss for the inefficiency.
Yeah, I think I've only done that on a couple of occasions, to be fair. You need to understand the rules of the market and understand there is still inefficiency to be filled. And especially when you have an added confidence of using that as an order block, because you've had, again, an impulsive move from that region, which has created candles which don't have wicks to the lower side, no wick to the lower side, no wick to the lower side of that candle either. So it's showing momentum is kicking in. But yes, okay, you have had a break of structure. And to be honest, like it depends how you look at your break of structure, because you could either try and mark it up like this, or you have like a drop, then like a pullback, then a drop like this. So that technically maybe is your high right there, which in that case might be a break of structure. You know,
yeah, that's why I would have chose that order block. Yeah.
So any way you look at it, regardless, equal lows, inefficiency still resting there, valid order block, just didn't really sweep and tag in. Unfortunate, but the setup looks grand.
Well, okay, dude, that's a fair point, because for me, like, you know, I don't want to say like today I'm gonna put my order block here, tomorrow I'm gonna put it here. Like I can put it in my plan when I do a C entry on the 1 minute, no inefficiencies underneath my order block, and that's it. I'll be happy with that. It will limit the number of trades I take and so on.
I guess it's just finding the order block which has inefficiency and the most confidences. Like it's emphasized all the way throughout. Just go for the order block which has the most confidences. It doesn't always have to be technically the one before we break the structure. Like you can have to break a structure two different ways there completely. It depends how you look at it. Like
the thing is,
like
I see what you mean with the confluences, but again, I wouldn't, as soon as this break of structure happened, I wouldn't see those equal lows.
Yeah, true.
I saw these equal lows. These are equal lows, swept, and then it went up, but yeah, it was just the imbalance.
Depends, like I said, mate, where your break of structure is, which defines your order block. I personally would have looked at that break of structure here.
Yeah,
You're looking at this one right here, man. It's dependent. Like it's how you look at the market. That's just how I'd see it. That's how.
It would have taken that one because of the break of structure, not because of the
Even then, like your break of structure doesn't really need to be that high. You've had like multiple other highs before we've broken the structure ultimately, which technically would be this one. So regardless of how you look at it, we've already kind of made a body closure here, meaning either way, your order block's still technically down here. And it makes the most sense to look at this, Andre, again, because of those regions of inefficiency which have been left behind as well, mate. So I guess it's just looking at it in a different way. You're completely right.
Yeah,
in your approach.
No, you're right. It makes sense. Yeah, I didn't.
You're completely correct, man.
No, right.
Ben, do you know this morning?
I'll just call this one a fluke. I'll just call this one a fluke.
Sorry, two people are talking at once.
I'll just call this one a fluke, I said.
Still journal it though, Andre.
It's a winner, mate. It's a winner, mate. It's a winner.
It's a winner, but again, like you said, like for example, you had a 6 pip stop loss. It went all the way up, and it only gave 3.62 R. So it's not big, you know.
Yeah.
Still 3.62%, mate. There's not many other trading schemes that can make that in that short of time.
My trial account is $500 from being passed from days. So no, I get it. Don't take me seriously, but I want to, do the same thing every single time. I don't want to have second thoughts on the 1 minute, especially.
I mean, I was just things in your plan about the amount of trades you'll take a day or something like that. To limit yourself from getting into too many bad trades. Like I won't take more than 2 trades in a day personally. I rarely take 2 trades in a day personally. Just it will make you focus on the ones that you've journaled and that are more high probability. It'll make you say, right, does this fit all of them? If this is one of my 2 trades in a day, does this fit everything that I want? Do you know what I mean?
Yeah.
I know quite a few guys have that in their plan. I definitely do personally. But yeah, that's one thing you could do, mate.
Yeah.
Definitely.
Oh,
But
so good.
yeah, that was the EU one. But yeah, again for that AU trade that I was eyeing, not I wasn't eyeing necessarily. Was the, what was it? Oh, sorry. The one from yesterday, like up to here, like if you don't see anything from here. Yeah, at this moment in time, would you be interested in zooming in?
No, very definitely not, mate. That's coming out of a daily
Well,
order.
okay, can you give me some reasons? Because like for me, in my plan, which is
Daily order block. That's a big fucking reason, mate.
which one?
It's coming out of a daily order block and a weekly order block. For me, I wouldn't be trying to trade a 15-minute break of structure into a daily back into a daily order block. If it's reacted out of it, like it's reacted out of it there, it's swept liquidity to the upside. It's, you know, kicked in with a fair bit of momentum. Like I know that goes down a fair bit from there.
Okay, like you took into account the higher time frame, but say
Yeah,
like I'm just talking about like as a visual thing for an M15. Like say if it wasn't in the daily.
no, but that's why it's important to be aware of, well, the momentum to the downside for a start. Yeah. If you just measure the time that it's taken to go one way, right? The time is a lot shorter to come down. It's a lot more impulsive on the way down than it is on the way up. You can also sort of see there on M15 that it swept equal highs and then pushed down, which would show that it's, you know, ready to make some form of move to the downside.
Yeah.
You know, it's just being quite, overall, that's being quite corrected. Like it's not really showing. I wouldn't be interested in that personally, mate. Like whatever time.
Do you want me to show you what analysis I've got on AU?
Yeah. From I even saw this imbalance here, and I thought the price would have to then bounce back here.
The market doesn't have to. It wants to fill inefficiency, right? But if you take inefficiency as a type of liquidity, the market needs to leave available liquidity at points. It can't just run all liquidity straight away, right? Because then there's nothing to come back to. You know, like that's why you'll see sometimes, I mean, there's been a couple of good examples. GU on, I think it was on Thursday or Friday, was a good example where in the morning, right before London Open, there was a massive set of equal highs, right? That just, let me annotate quickly just here, right? Those equal highs there, right?
Yeah.
So they didn't get swept straight away, right? They got left as resting liquidity from, you know, retail sellers, whoever, pushing price down to then be taken on the way back up. Because the market needs efficiency at various different places to fuel moves, right? You can't just run all the liquidity, because then everyone's going to get stopped out straight away. There's no reason for them to be back in the market. If everyone's just losing constantly all the time, banks aren't going to have anyone to play with pretty quickly, mate. Like, they're just going to be trying to fuck each other over, and they're too clever to do that. Do you know what I mean? Make sense?
Yeah. Okay. Yeah. Makes sense. Yeah. Yeah. It was just like, you know, the setup. Looking at my plan had nothing against it. Like it was with the.
That, I mean, that's sort of why I always preach the higher time frames, mate, because the higher time frames win every single time. Like if you're trying to trade a 15-minute break of structure into a 4-hour order block, 9 times out of 10, that trade's going to go against you. Which is, you know, it's fine. You know, you're waiting for confirmation entries anyway, which is, you know, you'll know that when it hits your 5-minute order block, if you don't get the confirmation entry, you don't go ahead with the trade.
Yeah.
Right. Which is why the vast majority of the community use confirmation entries, because you do, risk entries work under a very specific set of conditions, right? I rarely take them. Like once in a blue moon, I'll see like a perfect sort of risk entry that I'll go, yeah, fine, I'll take that. But it's rare, mate. Like I honestly, I think the last time I took one was beginning of last month, something like that, maybe. And it depends what you define as a risk entry and all that sort of stuff as well. But I wouldn't ever take like just a risk entry from say like a 15-minute break of structure and then coming back to that order block. I would then want some other sort of time frame confirmation.
Yeah, no, definitely not. No, I only do confirmation entries.
Yeah.
Like, I actually want to filter out as much as I can because I see too many order blocks. So.
Yeah, I mean that's the thing, mate. You need to work on which order blocks are generally the strongest. Like for me, the ones I've found that are the strongest are ones that take liquidity, ones that leave imbalance, obviously. Like the one necessity for an order block is that it has to break structure, right? That is the only absolute given. And then it's down to you how you want to refine them.
What do you mean it an order block takes liquidity?
So,
or like if liquid,
for example, here, right? This one takes out the resting liquidity here and then pushes.
Oh, yeah, okay, yeah.
So that would then be, say that was on like the 4 hour or something like that. That's exactly something I'd be looking for, like to see how we came down and reacted to it and then went back up, right?
So that correct, but I would have thought, oh shit, I would have thought that it's like you see this as an order block and liquidity is swept by going into this one, not necessarily creating this one. I never.
Well, this mitigates. So the theory of order blocks, right, is there's two reasons why price will come back to them, right? One is to fill more orders, right? The other one is the banks, institutions, anyone with a lot of money, Roland, whoever wants to hedge their position, right? And generate and fill enough orders, right? So say here, right? This is banks and institutions selling, right? Because they're the only people who have the money to move the market, right? We will never ever be able to move the market, right?
Yeah.
So they will sell, right? A, hedging their long positions, and B, taking out these sort of relative equal lows here, right? There's a ton of liquidity resting under here. They'll then want to, so they'll have, once price does this, they'll have a load of positions in drawdown, right? Because they don't trade with stocks like us. They actually physically own the currency, right? We just trade contracts for difference. So they then need to bring price back to mitigate out of their losing positions, right? And then either continue with the move, or they might have taken all the profit that they need to up here, right? So they'll just then mitigate out of those positions. They will have taken profits on their longs up there, and then the order block will get burned through. But that's why price has already started stalling at this one. Whether it continues up or not, who knows, mate? But that's why a series of mitigation is really good, right? Because it shows them manipulating the market, pushing, right? Then coming back, mitigating out of their positions in drawdown, right? So here, that would be another order block, like you break structure up here, right? So that has then been, this position that was in drawdown now been mitigated out of. They push price to the upside. That's why it explodes out of it, right? Then it comes back down, trickles around, and now it will either continue on up or, continue on down. But that's why a series of mitigations is really good, because that's how you really start to read the footprints of what they're doing. Because there are a ton of order blocks, right? But which order blocks are relevant? Like, is it an organic break of structure? Like something, say, this is why I like swing highs and swing lows, because say, even here, I'd start calling that a non-organically formed order block, right? Because it's broken a swing high there, right? Price has made a push, pulled back, and made a push again, right? Then taps in, pushes up again, right? But there's obviously something on a higher time frame up here, I can't see to the left, that they had to mitigate and then drop down, right? Yeah, so they've mitigated something in this. which this one, right, if you look at it again, this one's a great example of a really strong order block, because what does it do? It takes equal highs, right? Mitigates something in this, which isn't necessarily an order block as such, but it is definitely, there's been a strong move away from it, right?
Yeah.
We then break structure to the downside, come back up, don't fully complete the objective at this order block, right? But leave some resting liquidity there, drop down, come back up. Remember, they've got positions in drawdown here, yeah? So they need to get out of them. They've taken all their profit at this point, probably. So they're just waiting for price to come back up, mitigate them out of their positions and fill the rest of their resting orders. And then that's why it's absolutely sunk off of that, right? It's you need to try to build the story of what's happening, right? It's not just any break of structure is an order block. It's not just like any run on liquidity is this, that, the other. It's about like what's happened previously to it, what's led up to that move, why is that move happened, why is that important. Do you see what I mean?
Yeah, no, I understand now. Yeah, okay, thank you very much. I think, sorry, Dan was also trying to wanted to say, right, to show something.
Oh yeah, no, some great knowledge bombs there, and this is why it's good to have these meetups, because Sam is very knowledgeable in how the market moves and looks at the market from a completely different perspective as to and that's absolutely fine. There's no right or wrong. Like, I'm personally not interested what's happening on the daily time frame. I'm looking at recent price action, because I suppose I'm more of an intraday sort of scalper, so to speak. So it's important to understand that everybody looks at the market and the strategy in a different way. But now some great knowledge bombs there, Sam boy. I was just going to say, did you want me to share how I was looking at AU this morning, Andre?
Yeah. Please. Yeah. The only, I don't know, Sam. Do you trade FTMO? Like, do you have problems with like keeping it overnight? Because I don't know how long you keep.
No, FTMO is fine. You can hold. I mean, I thought you couldn't hold over the weekend, but
apparently you can, can't you? If you let them know a couple of days before.
Right. Yeah. So I'm going to be looking into that, mate. Yeah.
But like when it comes to like news and stuff, because it depends. Like if a news, like you're in a trade from Tuesday and there's a news on Wednesday, it depends, because I don't know, it can be you can be taken out during that news.
Yeah, of course you can. So you either close your position.
Close it, mate. I'll tell you a horror story. A good friend of mine passed his FTMO challenge about 2 weeks ago. Using Phantom, albeit it was just a 1 minute, but he passed it. And when you pass an FTMO challenge, you have new sort of what's the word? You have new issues to bear in mind. So, for example, like restricted events. For me personally, it doesn't affect my trading style unless there's a restricted event in my session that I trade. But he didn't check his restricted events in the morning, and he took a trade and was taken out in profit. So he'd locked in 1.5% profit and was taken out before 2 minutes or 2 minutes after or before the trade, and his account was deactivated. Now, it's as simple as that. You've got to, if you're going to be trading an FTMO, you've got to treat it like a business. So in the morning, one of the first things I do when I write what I'm doing and my plan of action for the day is I check my restricted news events, and I put like a horizontal line on my chart on that particular pair with the time and the news event. So I know that if I am in a position, I'm going to close it profit or loss 15 minutes beforehand, because it's a bit sneaky, I think, if I'm honest with you, from an FTMO perspective. You can look at it how you want, but I know a lot of people that have been caught out, and it's just something to bear in mind if you are trading funded capital with them.
Yeah, no, definitely. Do you get like an email at the end of each week, and you can put your horizontal bars from the beginning of the weekend?
They have an economic calendar on their site as well, mate, that you can just go on it. I generally do it on a Sunday, and I'll click all, like I do exactly the same as Dan. I'll just stick like vertical lines.
Yeah.
And it's,
you do get, the thing is with FTMO, you get a lot of emails going to your junk mail as well. So you've got to check that. But if you go onto the website, I don't know if it's the same on Windows computers, but on Mac, on Apple computers, when you're on the FTMO website, you can allow notifications. So it will give you notifications as well if you're on the website. So say you've got your FTMO metrics up in front of you, you will get a notification as well to say there's an upcoming restricted event.
Yeah, yeah. And for taking the challenge, the news and weekends don't matter, do they?
It's irrelevant, mate. Yeah, it's irrelevant.
Yeah. All right. Yeah. Sorry, Dan. You can continue sharing how you were viewing AU. Yeah.
Yeah. Right. I was just going to show you how I viewed AU this morning.
Yeah. Please.
Right, let's have a look.
That's great because I was looking at the same thing.
Right. So from my perspective, again, this is just how I've seen the market. So I looked on the 1 hour. We have been quite bullish. You can quite clearly see we're in an uptrend, but we broke quite a significant low here, a swing low, which on the 1 hour was a bit more prominent. So once we broke that low, I went to the 15 minutes, marked my technical. So we did have a breaker structure here. We had a major breaker structure here, had some substructure breaks. We'd left some equal highs here, some imbalance here, some imbalance here, and an order block here. So we've also got some equal highs here. So for me personally, this area of interest here, if we got a solid confirmation entry, then I'd probably take it if it was my time of day. But I'd probably take it at a quarter of the risk because you've got equals above it and you've got this big chunk of inefficiency. It's still a valid trade, but it's not high probability. So yeah, I certainly would have been looking. I think you was looking down here to.
I was looking at towards the right. That you didn't even take it.
Here.
If you go further up, there's another order block there where you said just above that little imbalance on the right, more to the right.
Here.
No, right, and then there now go down with price. There, and there's that doji. Yeah, there.
Right. Okay.
Yeah, they're 230.
Further down. There, that one.
Yeah. That would have also.
That's where I took the trade. That's where I took the trade.
A valid order block. But what you've got to remember is you've got this imbalance up here, and you've also got this order block up here. So that would have put me off straight away.
Yeah. Okay. That's going into my rules definitely. There you go. That's me getting some value already. Because like
Also you got to remember is
if there's imbalances or equal highs above the order block that you're interested, like the M15 AOI, be careful or just not be interested.
You've just got to remember that price may not come up to here to fill this and rebalance price now. Like with inefficiency, it doesn't have to be filled now. It could be immediately, it could be a month, it could be a year. But you've just got to bear in the back of your mind that what could cause me an issue, you've got equal highs here, you've got imbalance up here, and you've got an area of interest. And like Sam said, from a daily perspective, we've come out of that, haven't we, Sam? Is that correct?
Yeah. Oh, sorry, mate. 1 sec. Oh no, I am unmuted. Yeah, we've come out of daily order block, mate.
Yeah. So you've got all those confluences to say, is this one going to hold or is this one? Probably not. It may well do, and you might get a little scalp out of it, but the chances are you've got equal highs. So there's clear liquidity, this big gap here of liquidity and imbalance that needs to be filled. So that would turn me off straight away.
Yeah, fair enough.
Does that make sense?
Yeah, it does. I mean, yeah, the trade that I took, taking into account if I would have put the stop loss that mitigates that, like covers that wick, it would have worked out like, I don't know, 3/4 of the trade. But overall, the bigger picture, I had more imbalance at the top, more equal lows at the top. And
yeah.
You look.
I mean, ideally, if for example, if we swept this liquidity here, say for example, I don't know, had a sponsor candle or an FU candle, we swept the liquidity, a clear liquidity play, came back down, produced a nice confirmation entry, then fair enough, you've sort of got rid of that problem in one sense, but you've still got this to think about. So again, it doesn't mean that price is going to take, that could have been the perfect trade, but it's just look at anything that may cause you a problem. And if so, and it still fits your plan, take the trade, but just take it at small risk.
Fair enough. Yeah, great. Thank you.
And like I said this morning, one of my least traded pairs is EJ. I just generally don't take that many trades. So I looked at it this morning. I marked up, I think, where is it? Yeah, I seen that we were coming down to, we created some equal loads, had a little bit of imbalance, but a breaker structure here, a breaker structure here. So I was looking at these potential areas. As you can see, prices smashed right through, filled imbalance, swept equals, and all the other pairs, nothing on there at all. And you were similar to AU, to be fair, but
for the EJ, I mean, I think if you manage to take the price back to like 6 a.m. in the morning, at 6 a.m. in the morning, you wouldn't see that equal low. Like, because that's where I took the trade, and you know that's where you would have taken a trade, I guess, or something. I don't know.
Right, so it's at 6 o'clock in the morning.
Yeah,
we
like
would.
the price.
I'd be waiting for price to come here. So then we created these equal lows, almost filled the inefficiency, and then price just wicked the high. So that for me isn't a breaker structure. So I was sort of thinking, well, if price correctively comes down here, if we fill this imbalance, sweep these equals, also sweep the Asia lows again, and we get a nice clean confirmation entry, we trade in with the trend. So that would have been a really nice setup. But as you can see, it smashed straight through it. So it's, it's invalid.
Yeah. Okay. Yeah. See, I am seeing more trades than I'm supposed to.
But the rest of the pairs, mate.
The fact that they work out might be in my disadvantage. Because I'm getting.
As long as you do your ASR, mate, you learn from your losers, not your winners. So when you are back testing, don't be disheartened if you take 10 losses in a row. Study them hard. What you went wrong, what went right, and just learn from them and don't repeat the same things again.
Mm-hmm. Yeah. Thank you. Good.
But the markets, from my perspective, this morning are pretty ugly. They have been all week.
Dan, a quick question. Would you say that you mostly
Can I ask something?
Yeah, go for it, mate. What did you say? Sorry, buddy.
Yeah, I was asking if you mainly focus on proeminent highs and lows.
What do you mean in terms of targets, or?
No, not in terms of targets, in terms of break-off structure. So for example, if you have just 1-2 candles pullback, would you consider that a pullback, or do you usually wait for more candles or a bigger correction or anything like that? If you know,
it depends what time frame it is, really. Like so for example, just looking at this chart, because I'm on here now, I would, hang on 1 second, get rid of this. Right, so for example here, that would be my high, and this here would be my low. It's always good to switch to the line chart as well, because the line chart will, let me show you.
yeah, I think
you can see here, we've got a clear pullback.
Mm-hmm.
So sometimes switching to the line chart helps you determine what would actually be a pullback, but it depends on the time frame. Like, so that would be my break of structure on the 15-minute. Now, this bit of structure here, once you've broken this bit of structure, I would class that as a major structure break. Mm-hmm. So that to me signifies that we're definitely looking to change trend. But for example, on the 1 minute, I will take a 1 candle pullback. But ideally, I'll look for 2 levels of structure to broken. Let me see if I can find an example of what I mean. Right, so for example, right, so say we've got a break of structure here. I know this isn't the greatest of examples, but we've clearly closed above this wick here. But see here, we've also got, bear with me guys, my internet's having a meltdown. Where was we? All right. So we've got break structure here. We've also got a break structure here. So if I was looking for an entry, for example, on the 1 minute, I want to see 2 bits of structure broken. That says to me that the 1 minute is ready to commit to change trend. Does that make sense?
Yeah, it does.
And
So-
would it not be a break of structure further down also? Like what?
Yeah, you could look at it from there as well.
Yeah.
That's
But
substructure.
you've got to look at the.
Dan.
Yeah, that's right. So it's what makes sense, really. Like for example, you've got all this inefficiency here. So this would be my AOI. Yeah, you've got all that inefficiency there. You could class that as a break structure. 1, 2, 3. Again, it's about what works for you. Sometimes a one candle pullback will work, especially if you've got corrective price action moving towards your AOI. If it's very impulsive and then you get a one candle pullback, then I'd ideally be looking for a higher breaker structure. And like Sam said, sometimes if you flick to the 5 minute, this level here might be your 5 minute breaker structure. Then you can go to the 1 minute and look to refine it and see if it breaks that level, if that makes sense.
Mm-hmm. Yeah.
Anything else? While I'm on the charts, or yeah, man. Did someone speak?
Can you please show me an example of a continuation entry?
A continuation entry, yeah, sure, man. Right, let's have a look.
Yeah, please compare it with a reversal because I tend to get confused sometimes. Thank you.
Okay, no problem. Bear with me, mate. Right, so for example, this one here. See if I can make it any bigger.
You just open this page.
Cheers, Elliot. Right, so for example,
He shared all his nudes yesterday.
GBP. What's that, mate? What's that, mate?
I've learned so much about Notion in the last 24 hours.
Oh yeah, everyone's got my fucking Notion now, haven't they? So for example here, right, we've got, this is probably a bad example. Yeah, it's a shit example. You'll find a better one.
What's that? Elliot's nudes? Is that the folder? You got it?
You know, mate. No, I sold that on the dark web ages ago.
That's the thing, mate.
Right, so
in details.
This one here, right? So we're clearly in an uptrend. We're making higher highs and high lows on the hourly one, right? So in the drop to the 15 minute, I see we've got an impulsive breaker structure. We've got a clear area of interest refined to the 5 minute. We've got some equal lows. We've also got the Asia range and we've got inefficiency. So this is a really high probable setup as well. We've got a doji as the candle, which like Ben says is high probability. So I've marked that up. We've rejected it a few times. We've swept liquidity. We've swept Asia. We've filled imbalance. Then dropped to the 1 minute time frame. And you see what I mean here by we've got 1, 2 levels of breaker structure. Now what we've got here as well, we've got a doji as my entry AOI. Now, I think it was yesterday someone said, would you discount or disregard that because the imbalance has been filled? I wouldn't disregard that until it's broke 15-minute structure. So the fact that we ranged a little bit and we created equal lows made it even more high probability. So this is what I would class as a continuation trade. H1 bullish, M15 bullish, 1 minute bullish. This one was a market execution, mate. So I was on the charts anyway, waited for price to hit the 50% equilibrium point, and
so
I
you
bought
waited
at market
for those
price.
equal lows. You waited for those equal lows.
No. I put the order on as soon as we broke this bit of structure here, so it didn't quite tap me in there. But I kept my risk reward tool on, and well, was hoping for price to come down. And when it did come down and hit my area, click the button.
Click the button. Okay, yeah. Because
So
it's important to know.
That's an example of what I would class as a continuation.
Yeah.
Does that make sense? Does that answer your question?
Theo.
It forming equal loads is pretty positive thing, right? Something that you want to see.
What's that, sorry?
We got Blackwatch in the building.
Yeah, what's up, guys?
Yay, did he make it for a bit?
Yeah, my power went out last night and it's still out. So I'm kind of using a little hotspot and I'm on my phone right now. So I can't really do too much, but just thought I'd join and say, hey.
Yeah, so that's basically the example of what I would class as a continuation, because we're going with the H1 trend, we're going with the 15-minute trend, and then we've got a clear change on the lower time frames as well. Does that make sense, Theo?
That is a yes.
Yes,
yes,
maybe.
yes, it makes sense. Can you please give me an example of a reversal?
What, as in a counter trend trade?
I'm trying to understand or build the difference between reversals and continuations, because all of them are executed mostly via risk entries. So I'm trying to wrap my head around reversals and continuations.
So
right, okay.
Dan, you've got exactly the same banner at the top of your Notion as I have, by the way.
Fucking, because we're the best, mate. That's why.
Yeah,
and sometimes we can do something great, because most things I do is shit.
Yeah, that's it. At least try and make this good. A reversal would be anything that's against the higher time frame trend, mate. So say on H1.
I'll pass this over to you then, Sam.
Yeah, cool, man. I'll pop the screen.
Share your screen, mate.
Can you see that? So look, on the 4 hour, right? Like here, you're bullish, right? You're breaking. Let me just get this up. You're not breaking the lows. Like here, we never close below a low, right? So you wick that low, then break structure here, then push up, break structure here. So anything trying to sell this, right, would be a reversal, right? So say, let me pick. Okay, so here, right, this would be a good example of a reversal, right? So here, I mean, this is actually, yeah, I guess this would be a reversal because you've got a break of structure here, right? This is a reversal that works, but often they don't. I tend to try and stay away from reversals nowadays, just because, you know, if you're trading with the trend, it's more high probability, right? So Albert actually did a video on this trade, which is a really, really good video, but you've got like a really good point of interest here, right? Again, like I wouldn't take a reversal off anything less than a 4 hour point of interest. This one takes liquidity here, mitigates something over here and breaks this structure here, right? So it's obviously quite a strong order block. Like you can see the momentum, sort of there's imbalance left above it as well and equal lows left above it, which is all good things. So now we've broken structure to the downside. Anything that is a reversal would be anything trying to buy this, right? Anything, if you were continuing the trend, would be, sorry, can you not all see that Zoom window on my screen?
Nope.
Okay, just me then. Hold on 2 seconds. I managed to get the Zoom window right in the middle of my charts, which is a good thing.
You're tripping, fam. You're tripping, fam.
Yeah, there we go. Right, so with a reversal, you'd always be, with a continuation trade, your targets can be bigger, right? Because like in Blackwatch's video where he explains that the expectation when you're going with a trend is that price will make higher highs if you're bullish, right? So you come down, you make a low here, you make another higher high here, you make a low here, then you make another higher high here, higher low, higher high, right? Then you break this low. So the expectation would be for it to make a lower high and then a lower low, right? So buying this from here, you'd want to be aware that your targets would have to be more sensible, right? You couldn't just say target, like it would be unrealistic to target something like this. It's also slightly less probabilistic taking a trade that's against the trend because you're just not with the prevailing momentum, right? When markets are trending, you've got to think to this, I mean, we've been bullish on GU since what, the 23rd of September, right? We haven't actually closed below any of the lows, right? There's been wicks, yeah. So this one wicked these two equal lows, this wick, this, you know, but there's never been a close below, right? This I wouldn't necessarily class as structure as such. It's just more sort of a consolidation, a reaccumulation, something like that, before a push up. But yeah, with a continuation, you then, or sorry, with a reversal, you'd then be looking to buy this back up to a level, like play the retracement, and then sell it back down to make the lower lows, if that makes sense, right? So the actual trade on this was, you know, you push into the 4-hour order block, you break, you start breaking structure here, you then break another layer of structure. You end up breaking another layer of structure here. Now, on a reversal trade, I'd always want to see a lot more sort of confirmations than I would on a continuation, because continuations are inherently more probabilistic that they'll work out, because you're trading with the big money, right? The big money are who causes the trend. Like retail traders are generally sort of conditioned almost to look for reversals because it's how they gain liquidity. Right, so then, yeah, come down, candle. So then this for me would be starting to look like, you know, something, we're ranging here, right? And ranges, not always, but are generally one of sort of four things. They're either accumulation, distribution, reaccumulation or redistribution, right? So what they're doing here is accumulating to push up, right? So the reason they do that is A, they need to generate enough liquidity to force the move up, and B, they don't want that many people in the trade, because, you know, if they're sort of taking, or if they haven't got all the positions, they're not making as much money as they possibly could. Right, so that's why markets will consolidate for liquidity and to shake out weak-handed buyers or sellers, essentially, right? So then this plays nicely off of here. I mean, I would have taken this at the 50% just because otherwise my stop would be too big. But I would always wait for something like this to play out before I took a reversal trade, right? 4-hour order block, you know, lots of breaks of structure, lots of mitigations. It's mitigated this, it's mitigated this, it's mitigated this, it's broken structure again, which would show me that the market's sort of ready to continue on up, right? And then it taps in and never comes back. I mean, that ends up running right up to the hourly high. But then, you know, the main difference, apart from the amount of confirmations you would look for a reversal trade, is just being aware of where you would target, right? Because it's unrealistic now that we've broken structure to the downside to expect price to continue straight away on up and make higher highs, right? So you'd want to manage your trade a bit more aggressively, like saying, like, I'm going to pull at least some of my position here, and then, you know, there's this really nice order block up here, so I would close, you know, your whole position up there, something like that, right? Depending on how you choose to trade, that's how I like to trade personally, like with structure. I know one really good way Ryan uses is fib levels as well. So you can decide where to start pulling partials of your trades and stuff like that. But yeah, that then continues rallying up, but then it never continues up past that point, right? And continues then down to make a lower low, right? It takes a little bit of time, but that's what it does because you're going with the structure, right? So when you're thinking about reversals and continuations, the simplest way to put it would be a reversal is anything that's against the prevailing trend. So if you're breaking the highs and you're selling, then that's a reversal. And if you're breaking the lows and you're buying, then that's a reversal. Does that make sense?
Yes, sir.
Yeah.
Yes, 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 makes so much sense. Thank you.
No worries, mate. Is anything else anyone wants me to run? Oh, Waze wanted me to go over some 4-hour sort of POIs, didn't they?
Yeah.
So yeah, so for 4-hour POIs, again, it's like just trading with structure, right? That's ideally what you want to be doing, so this, as I said earlier, this would be a really good one for me, just because it breaks the highs, right? It does it somewhat impulsively. This bit of price action is pretty efficient, but it left imbalance here and here on the push up. Yeah, that's all efficient again, but there's still that little bit of imbalance just above that. Where is it? This one here. There's also sort of relative equal lows there. There's also all of these equal lows here, right? I want to see liquidity being built ideally because that's what fuels the market. And if they're generating a lot of liquidity, they're obviously leaving it there for something. Everything in the market is planned, right? None of it is as random as we think it is. So this one would be a great one for me as that. As that one takes the liquidity from below this, right? I mean, this is what I look for. It's not just sort of 4-hour points of interest. For me, this would be any point of interest that does something like this, that pushes away, has liquidity resting above it, has taken liquidity. That would always be favored sort of points of interest. I will obviously have other ones marked, but those would be my favorite ones. Like this one down here, I was looking at as well. It never actually came down to fill this. It just sort of bounced off the top. I think this one actually came into the daily order block just above that. But again, this one, not this specific one, as this would be the refinement. This would be the order block to me. But this would be the refined one with the imbalance. Again, it's got equal lows above it, just there. Has taken all this sort of resting liquidity from below here, mitigated something in the wick, and caused, a big break of structure eventually, right? This one down here, when we get back down to these levels, I would be looking at this whole sort of area. This one doesn't necessarily take liquidity like the other ones. It takes liquidity from below this low. It doesn't take out equal lows, which is something I always like to see personally. But you do, again, have these sort of relative equal lows sitting there. Really, really nice, strong push away from the POI with a lot of imbalance left. I actually thought that was going to come back down to get filled a lot sooner than it has.
When do you choose the OB or the refined one? For example, like in this example, the one at the bottom is like an unrefined one, and the one at the in the middle.
To be honest, I normally pick the refined one because it does. You've got more things going in your favor. Then refined is always better, right? You've got a smaller area of interest, so you're essentially keeping yourself out of more trades, right? Which is a good thing, mate. Like, it's always a good thing to keep yourself out of unprobabilistic trades. This one, again, this would be the actual order block to me, the sell before, but this would be the refined one because it's left the imbalance. That one, I would actually pick that one.
For example, like right now, as it is, because you have 3, you would expect a reaction from all three of them at some point, like in succession in a way.
Yeah, normally, mate. Yeah, I mean, markets have to do something like this, right? A market can't just go like that, right?
Yeah, sure.
So markets need to react off of something, right? So say you've got a bullish trend like this, right? You're going up nicely nice. You've got order blocks that are being left untested in them, yeah?
Yeah.
So you've got an order block here. You've got another order block, say here, and another one down here, right? On the way back down, price is going to need to retrace and refuel at some point, right?
Yeah.
So where's it going to do that from? The most probable areas are from places like this. So you'd see something like this, right? Tapping in, tapping in, going back up, and then respecting the other sort of higher time frames, right? That's how I tend to play reversals, but I won't do it off of anything less than a 4-hour order block.
And when this is the thing that I think gets me, and maybe why I wanted to tend towards like Ben's and Dan's approach in a way. You said that you would take, like, if you would take 2 trades a day. I'm not saying that I want to take any trades a day, but
yeah.
Because I'm not looking for trades. Like, I know it sounds as if I want to be a millionaire in 2 weeks. No.
Mate, it's easy when you first start. It's very easy to start seeing opportunity everywhere.
Exactly.
Really.
I want to see less and more high quality. But the idea is like, how, if you wanted to take a trade every day, like, do you plan it from like the day before? Because using the 4-hour, it takes a lot of hours to create anything.
Yeah, it does, mate. Yeah. I will, this area down here, for instance, I've still got this as like my back testing chart, but I still have that marked in my main chart. I've had it there since it formed. I will just leave that on there until
it's mitigated.
Yeah. And then it's gone. Like this one now, I won't have anymore because it's just been blown through, right? This one got used. Lovely. Then the next time we came down to it, we just blew straight through it, right? So that one's no use anymore, right? This one here.
And from those 2 ones, you only look for longs basically from them.
Yeah. I'll look for retracements, right? Like I'll look for price to tap into this, right? Not that it did, but I think Ivan got a trade off of this area because he was looking at it more as a daily area. But I would have looked for something to happen exactly as it has, right? For something to come back up and then push up to somewhere around here, right? Because this would then be my next opportunity for shorts, right? Up here. I mean, I had a couple of areas marked. I had this one marked and I had this one marked as well.
Yeah.
Neither of them got, or I didn't see the PA I wanted to see when we got to either of those areas, right? So then we come back up, tap into this one. So now, going structurally, right? Just on the 4-hour, this isn't taking into account the daily, because daily we're still bullish, right? This is a 4-hour pullback, right? So I wouldn't be surprised to see this make higher highs now. But we'll see. We'll see what happens, right? The pound's really weak at the moment and all of that sort of stuff, so you never know. But I would then be looking, or I tried to get in up here. I didn't get an entry personally, which is fine. But
and okay, if you were to get in there and you had a confirmation entry on whichever one, 1 minute or whatever, what take profit would you put? Because again,
with this night, we came off a daily order block. My initial, I would have taken at least a portion. I mean, the stop I would have got in here with was about 2 pips, 3 pips, something like that. But I would have initially taken like a decent chunk of my trade off, probably 50% at this sort of level, right? And then sort of thinking that we're going to come into this, probably taken another 10% of my trade off there, and then I'd eventually be targeting something like down here.
And how quickly do you put to break even?
As soon as we get a break of structure on whatever
on the execution, on whatever you found the confirmation in.
Exactly, mate. Exactly. So like the entry, not that this is something I'm still testing, like very much testing. But the entry I would have had was, I actually spoke to Elliot a little bit about this yesterday, is, you know, whether you guys want to test this or not, it's definitely a riskier play. I just see it play out quite a lot, but it's basically stuff to do with the equilibrium of something like that, right, of the last buy before leg, and then if imbalance or an OB lines up perfectly with the imbalance, then oftentimes price will just respect that and then absolutely drop, right? So my entry would have been there. As soon as we broke this structure here, I would have gone to break even and just let the trade do its thing with my take profits where they were. I mean, that one would have taken.
And you manage on the 1 minute, because you like
manage. What do you mean manage, mate? What, like
you manage the trade with the lows up on the 1 minute? Because
I wouldn't quite my stop, mate, personally, unless I saw something like, unless on the 1 minute, right, I saw something like this happen, right, I wouldn't be trading my stop. Like, I don't feel the need to. I think that my analysis of structure and where things are going to go is good enough that I can hold my trades until then. Basically, I wouldn't.
So you don't manage, because otherwise you would stay on the, like, if the trade is like for a day, you would have to stay in front of the computer all day long.
Yeah, exactly, mate. Exactly, right? Like, I'd just have alerts set, you know, for when price reaches here. As soon as it got to like here, probably, I'd just have an alert set. It would ping off, and I'd just open my phone, close half my trade, and leave the rest to do its thing, mate. Basically, until it hit the rest of my take profit levels. I mean, that's what I like. That's how I like to trade. Because again, like, we do trading for freedom as well, right? Like,
yeah,
I don't want to have to. Personally, I get that a lot of people really like routine, which is why the sort of London session open works really well for them, because you can just jump onto the charts for a set amount of time. I think Dan's normally on the charts for about 4 or 5 hours in the morning, and then he's done for the day. You know, he'll have a couple of alerts set, and that's it, right? Do his ASR, do his journaling, and then go. Where I will just have alerts set at my POIs, so that when one goes off, I know what I'm looking for, right? Like, I know what my entry models are, so I'll just jump on, sit there for half an hour normally, something like that, watching PA develop. And then if it goes without me, it goes without me. And if I get an entry, I get an entry.
You know that it's tapped into your 1 hour order block. Are you not looking for a confirmation entry? Sorry, I might have missed that a little bit.
Where, mate? Here?
Yeah, there.
Yeah, this is something I'm still very much testing, mate. Like, I didn't actually get this trade, like, full disclosure, because I tried to get in when we broke structure. Like, this is sort of what I mean about order flow as well, right? Let's remove that. So once we came down here, right, we pushed off, then we came down and broke structure here again, right?
Yeah.
We then formed these sort of equal highs here, right, here and here. And so I had an entry sitting there, basically, on the 50% of that, because I'd call that like a sponsor candle. I didn't get filled on it, which is fine, mate. You know, trades go without you every now and again. But this is just sort of an entry style that I'm working on. Because basically this, like, takes out the liquidity here, right? It's an FU candle, IFC, comfy candle, whatever we're calling it these days. About 900 different names for it. Personally, I like Kung Fu candle, so I'm sticking with that. But yeah, this is just something I'm working on.
Kentucky Fried Chicken.
Oh, sorry?
Kentucky Fried Chicken.
Kentucky Fried Chicken candle, yeah.
Yeah, that's the one. That's what
Yeah,
you say.
Fucking weirdo.
But then, yeah, this to me, after this point, after we broke this structure here, right, we did that pretty impulsively, left imbalance and all that sort of stuff. I didn't think it would come back to fill any of this imbalance straight away. It's obviously left this sitting here
way behind. Yeah,
like, you know, if it's retracing all the way back up there, in all honesty, it's probably just continuing up in it. Like that sort of, I don't like trades retrace sort of, and that was 40 odd pips, 30 pips at that point, something like that. I don't like trades that retrace that much because I just think that then momentum's back to the upside, and it's like I'd rather not trade. I'd wait to see another break of structure and it continue on down from there, basically.
Yeah.
Yeah.
Yeah, I'm with you on that. That makes sense.
Anyone got any other questions for me whilst I'm on chart?
Yes. I was going to say, oh, go on, mate.
I've got one to go real quick when this guy answered this. That's it, even.
Sorry, mate?
Did someone asked it?
You broke up?
I think so.
Okay. Yeah, GU right now, 1 minute. Callum's talking about it, and I'm on the exact same as well, man. I'm trying to show Andy it as well.
Yeah, I'm trying to look at it as well.
Yeah, like he's saying there's no AOI on the 4 hour, but I have a very different vision to that. So I'm just curious.
What, the 4 hour?
Yeah, because
you call this an AOI, basically.
I am, yeah.
I would personally not. I wouldn't say we've had a break of structure. Even if you're taking this as a structural point, which I personally wouldn't, it's not close below there, so I wouldn't call that an AOI. We're feeling some imbalance. I think that
that's what I'm saying, the imbalance.
Yeah. On there, there's definitely something, right? I mean, here we're definitely coming up to complete some other objective. As I said, mate, it's bounced off of a daily order block, right down at the bottom. So it could just be continuing up for now. I thought it's bounced off of this area, right? So this is, the last real low of proper significance, right? This is a low. This is a break of structure somewhat, but this is more of a correction, right? Like this is more of a distribution, right? So I wouldn't call this like a swing low. This would be sort of minor structure to me. This would be a proper low, right? Because we've had a decent push down from there and a good push away from it, right? So it's reacted off of this fairly strongly. I think it's just a bit undecided at the moment, mate, to be honest. It wants to continue the daily trend, but then everyone knows that the UK is about to have no trade deal. And
fucking Boris, man.
Yeah, fucking Boris, mate. I fully agree with you. That guy needs shooting.
Hang on a minute.
All right, mate. All right. You had a canistella. You had a canistella, mate.
So Albert was telling me I was giving Albert shit last night about something. He was like, "You're definitely drunk, aren't you?" I was like, "What do you mean? I've only had a bottle of gin. Shut up." Yeah. So GU on the 1 minute. Callum can trade that, mate.
Can I ask this?
Wait, Sam, leave it out. Don't get big. I was about to say no. I didn't want to turn my.
Can I ask please?
Yeah, of course you can. Far away.
I said
you might shit, by the way, mate. Just let you know.
Can I ask at what point? Can I ask Sam? At what point would you look for a scale in on that cell that you just covered on the 1 minute chart?
This one, mate. I'm not the best person to ask about scalings, man. I'm not the greatest at them, honestly. They're not one of my strong points. It's something I need to work on a lot, personally. But I'd rather just be open and honest with you and just say that I'm not. I mean, if I had got in here, I would have happy to try and scale in here, or once you're actually in a trade, and if I theoretically, right, if say this had come down, right, say I got an entry up here, right, this had come down, done this broken structure like this, and I'd got filled there, right. One of the rules I would have is that I would take then 50% of the fill, or some of the first position off, right?
Can we say
And then
there's a
let-
breaker there? Break or be there?
Sorry, mate?
Can we say there's a break or B? When the price push down, that's breaking structure.
Yeah,
Can we say it's a
definitely,
break?
definitely. Like here, there's a break of structure. Here, there's a break of structure. You really, I mean, Blackwatch is a great person to ask about Scaling, as he just takes pretty much all of the really good entries in the trend and manages to get ridiculous out of it. But I would say after any break of structure, you can potentially look for a scaling, right? Until it's moved a long way away from your AOI, and then you just want to let the trade run, right? That would be my sort of.
I mean break of order block.
A breaker block, you mean?
Yeah. Yeah.
Which one, mate?
When the price is swept to the equal highs. Break, when the price swept those equal highs, then
this one here.
It dropped down and breaks structure. Yeah. No, the last.
You can annotate on the screen.
The last
if
structure.
you look up on the top right, there's a little bit that you can annotate on. Am I still sharing my screen even?
Yeah.
Can we say there's a break or B there?
Yeah, that's a break of structure. Yeah, definitely. Very definitely. So
it can be a break order.
I'm not a breaker block.
Yeah.
A breaker block would be something more like this, mate. So you see how price comes down here and then breaks structure to the upside, and then we move through this impulsively with very little reaction, right? That I would then class as a breaker block. Again, it's not something I hugely trade personally. I'm more just order blocks, points of interest. I know a few people
same here, mate.
Inefficiencies and stuff like that, but for me, mate, I'd like to try and keep my trading somewhat simpler, because otherwise, I think you only really need 2 or 3 entry types, right? Maximum, that you work with and that you know work for you. I've got like my sort of FU entries that I'm working on, which would be this one, which would be the 3rd one that I add into my sort of entry models, along with the order flow ones and along with more liquidity driven ones, like more, I guess you could call them Wyckoff schematics or whatever, but they're more, I would say they're more focused around liquidity. But those, for me then, that is more than enough setups to take advantage of as much as I need to in the market, mate, because, you know, the RR we get on these trades is ridiculous. Like, you know, I mean, this one would have run to 1 to 50, something like that. You close half of that trade at 1% or even at 0.5% risk, right? That's still 12.5% account growth in one trade. That's more than most communities do in a month.
Yeah. Do you only do the 1 hour then? So the 1 hour, or you focus on the 4 hour and your main?
Yeah,
4 hour and 1 hour, mate. Yeah.
4 hour, 1 hour, fine. Cool.
Sam, do you mind sharing your trading plan, please?
I
Whoa. Hey.
Big question.
Get the news as well.
Oliver Twist, more sir.
I usually speak a lot in these meetings, and I don't even ask for that.
Yeah, mate. Everyone needs to share. Everyone needs to have a trading plan, right? Because I can give you my trading plan, but you're not going to have back tested the same things as me. You're not going to see the market exactly the same way I do, right? So you'll just be like, oh, okay, look, that looks like that. We'll take it.
Yeah, fair.
The way I look at that, right,
Okay,
is when I first
I
started my
think
trading journey. Sorry, Theo, go on, mate. I interrupted you there, bud.
Oh, I was saying I didn't mean it like that though. I just wanted to have an idea of how can I construct mine? Like what type of setups and example? Hence, I was asking with the continuations and stuff. So I'm trying to.
I'll send you some, mate. I've got a message that I sent to a lot of people, which basically explains what I like, what I've got included in my plan. I've got like a template message which I've sent to a lot of people, which will help you build your own trading plan. But like Sam rightly said, when I first started trading, it was signals, and you know, until you've built your own trading plan, you know, if that person dies that you're following, or if Discord dies, what are you going to do? If you're a full-time trader, you've got to build your trading plan based on your own back-tested data and information and knowledge, and it's got to fit your personality. Like I think I've seen one of Sam's first trading plans when he first started looking at SMC, and it didn't make any sense to me. And it's because everyone has different styles of trading, and yes, you could probably look at it and take some profits from it, but your trading plan's got to be a personal thing from your own personal results, and everybody's going to have a completely different plan. But I've got some examples of what you should include in your trading plan, or what I think you should include. So just DM me on Discord and I'll fire them to you, mate.
Appreciate it, man. Thank you.
Okay, thank you.
No worries.
Yeah, I'm more than happy to share a couple of setups with you as well. But like, I just echo fully everything Dan just said. It's so important for it to be personal, mate, because you know, trading is, at the end of the day, everyone sees things differently.
Yeah, sure, isn't it?
Just going back to reversals, obviously, like I was saying, we all look at the market in a different perspective. And for me, a reversal, I would class a reversal as a counter trend trade. Does anybody? I've got a good example of what I would class as well. It was the trade that passed my verification, so it's a very good example of a counter trend trade. And it just goes to show you can trade counter trend as long as you do have enough of the right confluence and the right target set.
Yeah, 100% you can, mate. Yeah, I'd love to see that done.
Yeah. One momento. Can everybody see that?
Yeah.
Right. So, I mean, this trade is a special trade to me. Deep in my soul, because this is the one that passed my verification on day one. So I fucking love it. But this is just an example of how you can take trades trading the way that I do. So looking at the 1 hour, right, you can clearly see we're making higher highs and higher lows, right? Forget the 4 hour. This is just looking at the 1 hour. I've seen we've got a H1 uptrend. We've got an AOI up here with some imbalance, some equal highs here. So first warning sign, not as high probability as I would like. 15-minute, this is basically Asia sweep, Asia play. We've swept the Asia highs. We've got loads of rejection wicks into my AOI. We've then had printed some equal highs here. So we've swept Asia highs. We've swept liquidity here. We've got a big candle, and I think if I'm right in saying that was the 8 o'clock candle. So it's a big rejection candle, getting people trapped on the wrong side of the market. We've got quite an impulsive breaker structure, which breaks here and breaks here. So theoretically 2 breaks of structure. It's left in balance. Price is then left in balance here, come back up, tapped my AOI, stop loss just above that wick. And if I remember rightly, price got to about here, then rapidly reversed. So you can take counter trend trades trading on these time frames, but what's important is to either target 15-minute swing lows or previous structure, because you will find that price will usually hit 15-minute highs or prior low swings and rapidly reverse. But for me, we swept liquidity, we swept Asia, we tapped into an AOI, we had a clean impulsive breaker structure, we cleared some equal highs, and we left in balance. So that's enough confluences for me to take a counter trend trade with a realistic target. Does that sort of make
That's a good
sense?
example.
So
I've understood that
taking
there's
a
two.
trade with the
Makes
trend.
sense.
Yeah, that's a nice trade, dude.
Yeah, I've understood that there's two types of trades you can take. One which is we're usually describing, which is the order blocks one from higher time frames and whatnot. But one's also one where if the market drops impulsively, it then needs to go back up and search this imbalance.
Yeah, that is definitely another type of trade, mate. That's again, that would be a more sort of counter trend trade, right? Say we dropped down, broke structure, tapped into hammered down impulsively, right?
Yeah.
Broke structure to the downside, tapped into like a 4 hour, 1 hour order block, whatever, into a point of interest. And then there's all that inefficiency left to go back up. That's definitely another good way to take a counter trend trade, because you've got something that's going to drag price away from your order, right? It needs to go back up and fill imbalance, or there's liquidity resting up there, or something like that, right?
Yeah.
100%. That's a good way to look at reversal trades, mate. Is to trade. Roland does it a lot. Like he trades back into efficiency.
Target the inefficiency.
Yeah. Right. Okay. Yeah. So then I go straight to the 1 minute or 5 minute time frame. See breaks of structure, and then I'm like, all right, cool. Here's an order block. Boom, it tapped me in. I'm off.
That's why GU popping, because it's targeting efficiency.
Dan, with regards to your entry on the 1 minute, because I was looking at it and I'm just imagining it, seeing in a live market, when the impulse on the 1 minute on this trade that actually got you the verification went that far away, would at no point you be interested in like entering on the 5 minute because it went so far, so it wouldn't go without you? Because like
let me just get it back. Let me just get it back up, mate. 1 second.
Yeah. It was the one with the verification.
Yeah, right. So on this trade, right, I actually took a break even on it first because I took this order block here. Because I had a breaker structure, tapped me in, and then when price sort of stalled here, because I was a bit, I'm a verification, I wanted to pass, I moved to break even when it was at about 1 to 4 hours. So it took me out for break even. So what I used to do is, if I got taken out, I'd walk away and be like, right, okay, next. But sometimes it just means that you've maybe got in a bit too early. So I seen this big spike up. It was the 8 o'clock candle. Then I realised that we cleared equal highs. So then I thought, let's clear order block here. It's left in balance. When price got here, I didn't think it was going to come back and tap it, but it did. So that's for example why sometimes it's, if you get taken out, doesn't mean it's your wrong trade idea. It just may mean that you've just got in a little bit early and you can get a better entry.
Yeah. And so at no point were you interested in going, like, after you saw that impulse, the imbalance and your 1 minute order block, it was so large, at no point, that one, at no point you thought, you know what, let me go on the 5 minute and enter on. Like,
to be honest with you, mate, I mean, I can't remember. I've got the memory of a fish, mate, if I'm honest, but I probably would have looked at that. I don't know. Is the honest answer, mate.
Like, no, in general, like
I don't take a lot of 5 minute confirmation entry.
Just the 1 minute.
Because a lot of the time, it's a little bit too, for the time you've moved far, times the breaker structure is a bit too far away. So I don't know. It's down to preference. I would advise sticking to, if you're going to the lower time frame, stick to the 5 minute because it's a higher confluent. It holds more weight. But when you get to know the 1 minute, you know what holds weight and what doesn't. Like Sam said earlier, it might just be the market breathing. But again, we've broken 1 bit of structure, 2 bits of structure. And that to me is a sign that we are ready to commit. And, that's the fact that it's an 8 o'clock candle as well is clearly just sweep. It's clearly So that's why I was quite happy to keep my eyes on the charts and wait for price to return to this point. And if it did, then I knew it was going to be a successful position.
Yeah. And I'll finish with this question because I'm sure everyone else has more questions. When you, for example, in this case, I saw you put your stop loss probably just above the wick, that other wick that was on the left. Whenever you like want to put a stop loss up just to like cover a wick or cover some sort of price action, or even when you this is the same question, when you trail your stops and you trail it under the lows, by how much under do you trail it, or by how much do you put the stop loss? Half a pip, or you put
that's why you got a back test, mate, because then you find out.
Yeah.
Okay, so it's not like
you,
market, from a market point of view or from a point of view.
No, I'll usually just probably do it by, I don't know, 1 pip or something like that. It's never really an exact number. It's usually about this sort of size. So I just do it by eye, mate.
Okay, yeah, you got it. I usually did it. I'm doing it by like half a pip, but I didn't like through my back testing. There's the name, but I didn't know if it actually mattered because we work with so small stop losses. Every half a pip or pip matters. So that's why I didn't know if.
I don't always manage because I've got like a target, and I mean this trade duration was it was about an hour and 15 minutes, so it's quite short. But like Sam said, I would, because my TPs can be hit quite quick, especially on the GBP pairs. Sometimes I don't manage. I might move to break even when we break this bit of structure here, and I'll let it run, or might take partials. But in this circumstance, I did manage on the 1 minute. It depends on the price action, really.
Yeah. Okay. Yeah, understood.
Do you want me to go over another example? I think this trade was. Go on, mate.
No, I was just saying. I was reading the chat. I think someone commented on EU doing the same thing as what you're describing, right now.
Oh, is it?
Yeah, kind of struggling.
To a degree, I wouldn't say that's as strong.
Yeah, it's not the whole way. Yeah, I mean, I was talking about my second entry with on the 15-minute candle, it's a massive impulse down.
Yeah.
And then you've got, obviously, if you go to the 1 minute time frame, I can see a break of structure a little bit, and then it pulls back into a 1 minute order block, and then it shoots off.
Where would your higher time frame order block be, or would you not have one?
No. So this is it's a lower time frame order block. I'm creating one for the market to search all the imbalance that is just left behind.
On the EU,
Yeah, on EU. So if you look at the 1:04 candle and drag that right, 1 p.m. 1:04, that little doji that's dropped down right at the bottom.
1:04. Yeah. Okay. Yeah.
1:04 p.m. and just draw an order block there to the right.
Yeah.
And that tapped in. Would that be? That's what I was looking at.
I would not class that as an order block, mate. No, that hasn't broken structure.
It's
broken substructure.
No structure.
But it's not broken structure. A structure here. I'll just do a really quick example of what.
If anything, it would be.
But I would say, so with structure, right? There's nothing in this leg for it to break. Right, this leg is all one push. There's this is lower, 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 so on and so forth. Right? This doesn't break anything. This is all a complex pullback. Right? That's why it's now reacting off of this. Right? This is the impulse, and this is the correction. You can definitely trade these, but I'd want a break of structure personally, mate. And now this.
So that one you just got on there now.
What are you drawing on, Sham?
Yes, are you? Because you've drawn one on 136. I kind of see that.
Sorry, you're seeing EU on my screen, right?
Yeah, EU on your screen. Yeah. And you've drawn an order block on.
So this one would be. I thought you were talking about this up here.
Oh no! Sorry, no. Oh, sorry. Someone else's screen was showing there. The blue one screen was showing. Now I can see the white.
That was me. Yeah. So
sorry. Okay, cool. Yeah.
Right. So yeah, I like, for me, there's nothing there on EU saying buy it at the moment. Personally, like we're just, it looks like it's going to correct a little bit deeper to me.
Changing way.
Sorry, mate.
You're broken up quite badly, Dan.
Has anyone got any questions around like routine or mindset or anything like that?
Wake up, fuck it up, leave, mate.
Could I have a look at both your trading plans, please?
No, you can't.
Yeah, as long as you share your OnlyFans page, mate.
Yeah. Share your needs and then we'll talk.
I've just downloaded TradingView for desktop.
What, they do TradingView for desktop?
Yeah, someone just put it in the Discord just now.
Do they have it for Mac?
Yeah. It's a beta version.
Nice.
Yeah, it's pretty decent. I can't see how much difference it is. I just had a trouble with getting all my my indicators over, but apparently it's just done it now. If anyone wonders where they've gone.
Nice. Yeah, I'll have a look. Right, guys.
Just stick an EMA and a trend line on it, mate. You'll be all right.
Exactly, that's it, mate. 2 EMAs, 1 200, 150. Right, when they cross over in the stochastics.
Just fucking buy and sell, mate. That's all you need to buy and sell.
That's it. Look.
Did I put that meme in the group ages ago with that guy who's just like some YouTube guy, and he's like got like shit tons of stuff drawing. It looks like a radar chart.
Oh, mate, I don't. Some people's charts, you've got to. You're just like, how can you even see anything? There was one guy who was doing like chart geometry on it or something. Just triangles all over everything. It's like when I first started trading, I traded harmonic patterns, which was enough shit all over the charts.
At least you got a list to learn how to play the harmonica, though, eh?
Oh, that's it, right? Felt like that running around the markets, mate. No idea. Look, this fib's an extension of this fib. That's an extension of this. That's an extension. Where's the logic in it, man?
It's good. It's good times.
Yeah. Listen, guys, I'm going to shoot off because I have things to do. But it's been absolutely lovely catching up with everyone. As always, as with all the team, and feel free to not contact us because we don't like any of you, all right? Feel free to get in touch if you've got any questions, yeah?
Yeah, appreciate it, man. Thank you.
Nice one, bro.
Take care, guys. Bye.
Cheers, bye.
Thank you.
Anyone else got anything to say before I jump off, or?
I don't actually know how many pairs you trade. I'm actually quite interested in that.
So I trade 5 pairs, but I'd say the least traded pair is EJ. So AU, EU, GJ, GU, and NU are my preferred pairs.
So, I've got AU, GU, GJ, and NU for myself. So you trade.
Yeah.
What's different to that you trade EU and EJ in there?
Yeah, I mean, to be honest with you, mate, I haven't taken a trade on EJ for probably about 2 months.
Yeah, it doesn't move.
I look at it. It don't, mate. And the thing is, like about a month or so ago, I was looking at USD CHF, which is a nice pair, but it doesn't really provide opportunities the times I like to trade. Same as USD CAD. So I basically just shrunk my pairs down to 4 or 5, focus on them. It's just, you're not getting lost in your analysis. You can keep on top of entries. You're not missing stuff, and it's just generally less stressful. You don't need to trade 10 pairs, mate. You really don't.
It's crazy doing that. So I can't get down with EU. But then I seen some people yesterday. I'm not getting FOMO, but I am quite interested to see how that did pair pretty well. Have you had some good experiences with it then?
Mate, honestly, EU, I mean, if I just go back to some of my winners from November.
I do a bit of an infusion of what you and Sam do. So I factor in, whereas you factor in the 1 hour, I'll factor in the 4 hour on top of that as well as the daily and the month. Shit tons of confluence, basically.
Yeah. And that's perfectly fine, mate. It's about, what works to you. EU, I always look at it, but, the style that I trade, EU again, it's like EJ. I don't get that many setups. It's mainly AU, NU, GU, and GJ.
Yeah, that's what I'm saying, man. I never see it move EU the same again. I just saw it yesterday. And I was like, shit, that's a pretty fucking clean move.
Yeah. I mean, to be honest with you, I think I back tested. Like, if, like, for example, like from about 6 to 11, I'll be on the charts, and at about 12 o'clock, we'll do my ASI if I've taken trades. And then what I'll do is I'll back test the 4 pairs the morning to see if I've missed anything. And I think I did catch a move on EU yesterday when I tested it. Let me have a look.
Possibly that one I'm talking about yesterday.
Yeah, it could well be, mate. Is it that one?
I can't see your screen.
Oh shit! Hang on.
Were you talking the whole time with your screen shared?
Oh fuck knows, mate.
Yeah, it's not on yet. Your screen.
Right, here we go.
Got you.
See it? Yeah.
Yeah.
Is it that one?
I think so. Looks a bit more convoluted than I remember, but possibly. Was it yesterday?
I think I looked at it.
Yeah,
Yeah,
one
I think
the
it
Asian
definitely
session
may.
yesterday.
Let's just have a look. What date is it today?
15th.
Yeah, it was yesterday. Yeah, so I basically seen, move this fucking thing out of the way. I seen that we had a clean breaker structure here, impulsive left imbalance, AOIs, imbalance left over, Asian session, tapped into my 15-minute order block. I think I went down to the 2-minute just purely because it looked a little bit cleaner. Sometimes it just does.
Yeah. What was that? What was that time and length of range to get to that? It was quite a while, wasn't it?
Yeah, it was. Yeah. Tapped into, breaker structure here, and
oh no, sorry, it wasn't.
Yeah,
I thought
left imbalance, tight stop, targeted this swing low, 7R. Yeah.
Yeah. The
But I generally don't take that many trades on that pair.
So you know the crossover. How are you using that for your compliments then?
What the EMA?
Yeah, the 50 in it.
Yeah, to be honest with you, it's an added compliment. Say, for example, let's see if I can find one.
Because I've never used EMAs in my life. I know a lot of people use them as indicators, but
yeah, the only time I will, it's purely just an added compliment, right? So say, for example, just for argument's sake, right? Let's just say this is an order block, right? It's not, but let's just say it is. Price comes in, it rejects it and closes below it. That would just be a confluence that we're not ready to commit to the upside. So I'll be looking for shorts.
Could you just
if I've got like a,
could you just knock it into replay mode? So onto that candle you were talking about, because what boggles me is, where does the crossover indicate that you are getting a crossover? At that point there, it's not going to show you that down little hump we've got going off there, which could only be described as a sledding thing like lineman. Do you remember that game when we used to play that?
It's a good game.
Yeah, to be fair, that's a bad example. Basically, all you got to think about is, if you've got, let's say, the EMA. Let me just fucking try and find one. Hang on 1 second. Let me just go back to
no stress, man.
Trades.
I guess I can do a bit of YouTubing on more EMA stuff, but I'd just be curious to how you have it there. You might even be like turning subconscious with it almost. I don't know.
No, it's definitely an added confluence, but it's pretty rare, to be honest, that I see it and you too. If I'm completely honest.
Is it again? Isn't it?
Say, for example, you've got like a fifth exponential moving average. So it's basically the average price over 50 days.
Yeah.
So there is one example here. Let me just try and find it.
Because 50 is usually for more short term, isn't it? And then 200's common for like longer term.
Yeah.
All right. That's pretty cool.
I will find one.
I can't believe EU, man. It's going.
Is it?
Yeah, I had it from the top. I had it all the way. I just moved my. I moved to break even a bit too early, man. I could have been riding this all the way from the start.
Oh, really?
Yeah, something for the ASR.
I was just going to ask actually, with the ASR, is
I'm
that?
sorry. Can I?
Whoa.
Sorry, yeah, I was
again,
just
mate.
literally gonna say, is the ASR literally just journaling, or is it more? Does it go in more depth than that, or?
I guess it's up to you, man. But yeah,
Well, for me, yeah. I mean, my ASR is, like you said, I will journal my live trades that I've taken in pretty much the same way. But for example, like and I'll do the same with back testing, the deeper you dig into your ASR, looking at, it's more so for your losing trades, like what has caused the trade to lose, where have I gone wrong.
Yeah, it's like chatting to
The
yourself.
deeper you dig in,
right? Okay.
It's like
into
chatting to
it,
yourself,
the better
but
you will learn. It's like chatting to yourself, yeah.
Basically.
Well, say, for
That's how
example,
I
here,
trade.
right, you've
Mine's
got-
very
this
rough.
is-
Like, sorry.
That's all right. So see, you've got like my order block here.
Will the meetup be recorded?
Yes, yeah, it will be.
Yeah, it'll be recorded, yeah, mate. Yeah. You see, you've got your EMA here. See how many times we've rejected it and not closed above it.
Yeah.
That's a confluence that we're not ready to commit to an uptrend. So if, say for example, you're
get in there,
like here, your EMA is here. We reject the 50 EMA, then you get a confirmation entry here. It's just another confluence because we've rejected and we've wicked through the 50 EMA. That's purely it, mate.
Yeah, I dig that. I
don't use it that much, but it's just if you see that you get a rejection from the 50 EMA around your area of interest, it's just a nice added confluence.
Yeah, so you're always looking at it previously, obviously, like you couldn't.
Yeah.
Where that line's gonna head.
Yeah, on the 15-minute, it's quite good because, like, if you see here, you've got like a massive wick rejection. That's happened. Price has moved down. We've wicked it again. Price has moved down. Wicked it again. Price has moved down. Every time you sort of reject it, a lot of people can just trade off the 50 EMA. You know, it's a simple way of just trading.
It's very close to where you'd put a trend line to the body, I think. But then I do see it. I see it cross over sometimes. So I was confused what the hell what it means when it crosses over.
What do you mean by?
I think you're
over?
thinking of when you're using two EMAs at the same time where they cross, and you're thinking that the trend would reverse then. But with this, you're just hoping it caps price. Like with the 50 EMA, it's on the same side of the market that you're hoping price is going to go to.
Yeah. Okay.
Yeah, like for example, if we were to close above,
just bang it,
have a full body close above the 50 EMA, then the chances are we might see a change of trend. We might start to see some upside momentum instead. Not always, but again, just a confluence.
Stick it on now. Which one did you use, Dan? Sorry,
mate.
What's the 50? Which one is it? Is there a certain indicator?
Right, if you just type in exponential, type in EXP, it'll be exponential moving average.
Yes, moving average exponential. Got it.
Yeah, then just double click it and change it to 50 and make it whatever color you want.
Yeah, I think I've got it. Fucking hell, it looks mental now.
What color is it? Pink?
There's so many. I've got the 50, the 20, the 50, the 100, the 200. It's crazy. It looks like veins.
Oh, mate, get rid of all of them, mate. Just keep the 50.
That's mental, that. Took ages to load up, they just came. I might get them all on, man. Fuck it.
Go back to head and shoulder patterns, mate.
Hey, mate.
Is there anything else? Yeah. Or
hello,
bro.
Hi, mate. Just can I ask you something, please, on the EU trade that you showed before, the short one from yesterday? would you consider that one as a reversal or reversal position?
Go back to it, mate. 1 second.
Thank you.
Yeah, that would be a reversal. So on the 15-minute, that would have been your high. That would have been your swing low. So as we've broke that, we're bearish. In fact, no, we're following the 15-minute trend because all of this is substructure. Because we broke that, until we break this high up here, we're still in a bearish range, if that makes sense.
Bearish.
So yeah, it would be
on the 50 minutes, yeah.
On the 15 minutes. So yeah, it would be classed as counter trend, but like I said, 15-minute swing low, price has tapped it and then it's reversed. So yeah, that would be classed as a reversal, mate. Yeah.
But reversal because you refer to the 1 hour, the directional bias, or?
I mean, I look at the 1 hour,
just
to sort of gauge what the market's doing, but all my technicals, so my AOIs, my inefficiency, my break to structure, that all happens on the 15-minute. If the 1 hour and the 15-minute are both trending in the same direction and a trade idea is in that direction, then, hard on time.
Yeah. No, because on this setup, I see the 1 hour still bullish. Like the directional bias was bullish for me. So then the 15 minutes switched to bearish and then went to bullish again, where you took now the short there. So I consider this one as a reversal related to the 1 hour.
Yeah.
So maybe I'm getting a bit confused between the 1 hour and 15 minutes.
Yeah, sometimes you can be bullish on the 1 hour, but then you've got to remember sometimes in order for your for example, your 15-minute AOI to be tapped, you need to see bear structure to get 1 hour order block if you're trading from the 1 hour. So I prefer to trade with the trend all day long, but I will take counter trend trades if I've got Asia sweeps, liquidity sweeps, clean breaks of structure, imbalance, but I'll make sure my target is set at the swings because like you see here, it's tapped my swing low and then it's continued with the 1 hour trend.
Right. All right. Yeah. Thank you. Perfect.
Makes sense. Yeah.
Yeah. Thanks.
How are we distinguishing swings? I've never called them swing lows, but I guess that is the areas where there's a lot of confluence in terms of like where the actual breaks come from. That what we're saying.
Basically, like a swing is, when you're making higher highs and high lows, that's basically a swing. So just go to the 4 hour, probably be a bit more.
I think I see it visually. I just never put theory to it.
So the best way to look at your swings is to use your line chart, mate. So you can see this was your higher high. You could potentially have that as your higher low, but really you'd want to see this swing H4 swing low broken to see a true change of trend. So we've broken this, we've then pulled back, we've not broken this, so we're still bearish. We've brought new lower light, and now, for example, on GU, I'd be looking for, on a higher time frame perspective, looking for shorts because we failed to make a higher high. If you look at this, we're actually in a new downtrend because we've broken this swing low.
Don't say this, Dad. I'm trying to short it right now, mate. Yeah.
That's all right then, mate. Good lad.
I mean, I've analysed it from the 4, to be fair, but I was going to ask you about pause in the market. What does that say to you? What do you think to pause in the market? Because you can see on a line graph a lot easier than you would in on a bar chart.
What do you mean pause? Like a correction?
So, like, if you see how, right, Frank, you've got one right to the left of your mouse. Oh, wait, that's my mouse. Let me just annotate it.
Go on, mate.
You You got something like going off like this with this guy here.
Right.
Just pauses in the market. I can't understand them just yet, but I don't know. Sometimes it's a good point to like reference where your price might come back to for a quick short, something like that. I mean, if you look at that without a line chart, for example.
That to me would just be, well, it's an order block for start because we broke structure, but it could just be on the lower time frames, a bit of consolidation. Like I bet you if you looked at the 1 minute there, that would probably be a bit of a range. And then we've swept that range of liquidity that's probably been built and filled the inefficiency. So that there is just a bit of indecision in the market.
Gives you a bit of time to think.
Yeah. But again, I don't really use the H4, so I, on a 15-minute, if I see like a sideways range, to me that's just building up buy side and sell side liquidity.
Yeah, you're going for 15-min lows or 15-min highs, right?
Yeah, that's correct, mate. Yeah,
no, it's a good strategy. I haven't opted it quite a bit. I've been back testing it loads. It's pretty solid.
Mate, it will click. Once you find your style, it will just click, and you'll have a light bulb moment, and then eventually you'll just be confident enough to just take less trades and just the high probability ones.
Yeah, I mean, I'm just trading on demo, just literally banging out trades and learning from that. But I think it's important to get used to placing trades as well, because it can be quite easy just to mark stuff up, back test it.
Yeah.
But the actual logistics of placing a trade and getting your psych right, that's quite important. I mean, I've played it before and I've done pretty well in support and resistance, but nothing compared to obviously percentages where you're just riding trends essentially.
Oh mate, it's insane. Like for example, this only took 3 trades. I can make it to load. So I've taken 3 trades in December, 28.8%.
Yes.
Wow. Yeah.
Good work.
You know, what other strategy are you going to find that can do that? And the trade duration is, this one was an hour and 15. This one was 10 minutes, and this one was 10 minutes. So in that 20 minutes, I've done 18%.
Yeah, there's a mad one I back tested.
It's powerful.
I think I got something like 11% in 24 minutes.
Insane, mate.
Yeah, it's 1.3 pip. Stop. It's fucking super tight. I was testing something where it's really tight. And yeah, man, 9:43 a.m. And I think, it takes 20 minutes from entry to reward to 11%, from setting the entry to hitting TP 11%.
Beautiful, mate. Beautiful.
Yeah, I'll share that one with you, actually. I wonder if you spot anything on it.
Yeah, on then. I'll
I know I can't. I'm on.
Share.
Sorry, I'm on 2 different machines. I'm actually. In fact,
right.
I'll try and get it up on here. Hang on.
Give me 2 secs. I'll be back in 2 minutes.
Yeah, no worries, man. Oh, all my nudes are going to show now as well. Let's see. Oh, God almighty. I can't put all this in with all you guys here. Okay.
Come on, boy. You can do it.
I'm getting there. GJ is 11%. There it is. Share screen. Ignore this Asian sniper thing. If you remember when Jay was doing the stuff in the group, Dan, I've never changed the name.
Yeah.
I've never changed the name of the Notion. The Notion.com. I've just called it out the whole way through.
Don't change if it ain't broken, mate.
That's it. I need to catch up with him actually. Okay. Can you guys see this? I don't know how this.
Nice chart colours, mate.
Do you like them?
Oh, they're all right, mate. Not bad.
The dark side, baby. Yeah, I've come from I've analysed it from a 4 hour as well on this.
Okay.
With my I class this as imbalance.
Yeah.
And I class that as an AOI for me on the 4 hours. So yeah, just making it mad simple. I use the HL and HH as pivots, high-low thing quite a lot as well.
Why would you class that as? Sorry, mate. Why would you class that as an AOI on the 4 hour?
I don't know, man. It just looks strong to me because we've left so much imbalance here. It just it resonates with me that price is going to want to return to that. I mean, it's just something when I'm flying through backtesting results, I always just see them areas, mark them out, and if price starts moving towards that, or it could go away from it. Who knows? I'll go for it. Does that make sense?
Yeah, it makes sense. It'd definitely be an AOI. But for me, like an order block for me has to break structure. But I suppose if you were to look, it probably did break a little bit of structure, albeit a wick, but it did break structure a little bit.
Yeah. Okay. So
you
here
definitely see a reaction there, wouldn't you?
Yeah, you want it to break off that. Well, you could call it maybe probably the 1 hour swing low or something maybe here.
Yeah.
But then I just heard someone saying about how what's his name trades inefficiency, but I've just always seen them as AOIs for better or for worse.
Yeah.
So yeah, then we see that, and then it is a 1 hour swing low you were talking about. It does break that.
Yeah, lovely.
We're seeing it come up. I've marked this after that imbalance. You know, I said to you yesterday about that little spinning top or doji you had, and I was like, oh yeah, don't worry. Kind of similar story here, but on a bigger time frame. I think, and then I'm just going to come a bit forward. 15-minute OB. Be good to see if everyone thinks that OB is actually valid. So I've taken that one based upon that's obviously the kind of the most momentum, and that's a break.
Nice liquidity being built as well with all those equals.
Yeah,
as well.
I never mark equals, but I do note them, but I never mark them. I just like to keep it quite clean. And then we're coming out into that. Something's popping off.
Hey.
Being tagged into GU. So that comes in to this. This is the 4 hour AOI, so you've still got a shit ton of movement to get to that. Right out of the I can't tell you the time. Then we get here on the 5 minute. I refined it down. That's that one there. Again, 5 minutes. The candle which broke the camel's back, we'll call it.
Yeah.
And then we're in here, and then that would be my entry there.
Okay.
Looks pretty clean because we've done a 50% of this 5 minute as well. In retrospect, seeing that, and then takes off and manages to reward 11%, I believe.
Very nice, mate.
But I can't remember how I'm showing this now. I feel like I'm just gloating.
Yeah, no, it's nice, mate. You know, you've gone from it's a nice scalp trade. You've utilised the 1 hour break structure, the 15-minute, 5 and the 1 minute. It's nice, mate. A nice clean 1 minute AOI with imbalance as well, with some liquidity. If you look as well, you've got some. Let me just fucking annotate 1 second. You've also got some equal highs there as well. So that's a nice. It's a nice entry AOI, mate.
Yeah, I guess this is based upon this, especially because it's a GU. That's exactly why I'm going for this GU shit today, and that shows the importance of back testing as well. But for better or for worse, because I'm pretty resilient with this right now.
Yeah.
In terms of this trade today, but yeah.
No, lovely, mate. Good work, bro. Good work.
Yeah, it's fun back testing. Definitely helps with the psych.
What's your sort of back testing routine?
I go as far as I can on the 1 minute. Wherever I
What do
can.
you do a day? Like, do you do like a specific amount of time or a pair a day or what?
Not really, no. I mean, I've done fuck all today. I'm pretty lax with it in terms of how much I get to do and test results and stuff. I just like to see. I mean, I'm really comfortable in GU and GJ because that's the ones I've mainly back tested. So I kind of see where they're going in that sense. But I don't know, man. I just pick a pair and then try and get as far as I can in 1 minute because it glitches out a bit sometimes. I don't know if you noticed that.
Yeah.
What you mean? Runs out of candles?
Yeah, and obviously I want to see the 1 minute. Like,
And then it kicks you out, doesn't it? And then you got to go back to
yeah,
that point again.
Fucking
So annoying.
It's like a whole game in itself, isn't it?
Yeah.
You can go back a little bit further than like if you just purely on the 1 minute time frame. I think it gives you about 10 days worth of data. But if you go to the 1 hour chart and you use the go to button at the bottom of your screen and go back, I think you can get about 2 months. If you go back 2 months on the 1 hour and then just change the 1 minute, it gives you a little bit more. Well, a little bit more candles on the 1 minute.
Weird.
Yeah, that does ring a bell. That does ring a bell.
Yeah, I spoke to Daniel Neve, and we were talking, and yeah, I think he found it out. So, for me personally, what I do is every day because I trade 5 pairs. For example, like on a Monday, I'll trade AU the previous week, Tuesday GU the previous week. So I'm always trading a week, a day for 1 pair. That's how I do it.
Did you I mean, when you said to me after a question about backtesting as well, I just thought originally I never backtested like that. So I used to just like go through the charts and kind of just see points, leaving the chart in future mode, if that makes any sense. And then and just marking up like I guess like hyper learning from the Joshua Bunker days.
Yeah.
In that sense, I don't know. Have you ever experienced that as well? Have you ever tried that, or do you just do?
Yeah, I have, mate. Yeah, I mean, when I first started back testing, sort of the high time frame stuff, like from the first month of being, I was just literally clicking on the hourly, waiting for the price to hit a 4 hour order block.
Yeah.
And I was doing bar replay, and someone said, "Don't do that." But then I found if I was just looking at the month and plotting my 15-minute order blocks, it didn't feel like I was actually back testing or taking live positions because I'd already see what's happened. So I prefer to use bar replay because you've got that sense of hesitation. Do I take it? Do I not? If you know that it's hit your 15-minute AOI and it's gone in your direction, you know that your subconscious will find an order block that will fit that plan. And to me, that isn't taking tangible data from the market.
Yeah, you're right. Yeah,
you've got to be honest with yourself in this game, mate. And
you can't lie in back.
One of the biggest things. You can't, mate. And the thing is, I've done it. I remember when I first started, probably for the first 6 months of my trading career, people used to say back test, and I'd be like, yeah, I'll back test 4 hours a day. Did I fuck, mate? I've probably done half-hour back testing and didn't log any of it. But
yeah,
when you start back testing and you dig deep into your winners and your losers and you really study that data, it really levels up your trading.
Yeah, I agree. But like, I think, do you know where that is? I feel like when from Guerrilla and doing all that kind of stuff, it was way too anal in terms of like how much stuff you had to test, like the whole spreadsheets and stuff. And like, I remember back then, like posting stuff in the forums about Notion and stuff like that, and just trying to get people to, use that a bit more rather than just using the spreadsheets. Yeah. It just seems so archaic in terms of that. But yeah, like recording it like this on Notion, it just seems so much more fluid, and like it's not necessarily like some crazy fucking laborious task,
I agree, mate. Like, I'll show you how I do mine. Like, I'll do.
Yeah. Great to see, mate. It feels like we're pretty similar.
Like, for example,
in terms of what we've done.
Yeah. Like, for example, AUD USD. It probably took me about, I'd say, 2 hours to backtest this week. So I'd look on the 1 hour. I mean, this is one of the examples that I've been through today.
What categories have you got actually? Sorry, on your data sheet. So you've got trade, pair.
What's in the confluences?
No,
sorry. I've got trade, pair, status, win. I've got win.
Yeah.
basically win, break even or lose, position long, short, opened, session, confluences, risk reward, stop size, and date closed. And that particular week, I took 4 trades. This one was a loser.
Is there a way you can click, for example,
uptrend?
When you've
I think we've broken that. Go on, mate.
Sorry.
Yeah.
There's a little bit of lag in there. They're on your Confluence strategy labels. How is there a way you can click them and just see which ones have, like, you know, which ones the most that have hit? That's quite interesting to me. Yeah, if you can do
I don't know, mate. I mean, I had a template sent to me from Ben, and I've just sort of added bits onto it.
Right. Yeah.
So,
do you know what I mean? If you could just click liquidity sweep and then see how many trades were a liquidity sweep, for example.
Yeah.
I'll have a look into that.
Notion's decent, mate.
You can filter the confluences section, can you not?
Yeah, that's what I'm saying. That's what I'm trying to say.
Yeah, I think it's because this one's locked. That's why I can't click into it. But yeah, you can filter. Yeah, it's locked for some reason.
Yeah, that's.
Oh, there we go. So yeah, you can choose them, and you can also. I think you can filter them, sort ascending, sort descending. I'm going to do it now because I'll just get confused and fucking throw the laptop out the window.
And I'm just curious. I know you've been on for a long time, so I don't want to take.
Oh, mate, don't worry about it, mate. It's fine.
Like today, for example, because I'm trying to basically do the same thing as you and Ben. Like when I get into live, I'm just taking too many stupid ones, whereas when I'm back testing, I'm like more patient and stuff. So I'm just curious, did you get into anything like today or yesterday that I could have a wee look over? Even if you just say the pair and the bias, I'll find it, you know?
Yeah. To be honest, today I looked at price action and 1 second, mate. Like I said, I looked at price action this morning and I didn't see anything that looked. Hang on, 1 hour. I didn't see anything that looked juicy, apart from Euro JPY was potentially setting up. That's a 50-minute on NU.
Yep, that just missed my entry. EJ.
Yeah, so I had this marked up. So we had a break structure, and then we broke this swing low, and we broke this swing low, and then we started making lower lows, lower highs. So I did mark up this AOI. I mean, to be fair, there might be a trade idea. Now it's in this area of interest, but you've got these equals and you've got this imbalance to figure out. So, you know, you've got to take that into consideration. But I marked up AU as well. Again, that's just tapped into an M15 AOI. There's potentially could be a trade set up there. But other than that, no, the markets looked ugly today, mate. Like I say, yesterday I had food poisoning, so I was in bed in the morning. But when I back tested the sweep, so to speak, I did catch this EU trade yesterday, but even that wasn't high probability. So with these big gaps as well, I don't know. I don't trust them. I don't like them. I like to see full price action. So I'd say for the last couple of days, price action's been a bit messy. To be honest, there's nothing high probable for me.
Yeah, no, that's fair enough. I think
have you taken anything yourself, have you, or?
Yeah, just stupid wee losses, but not to worry. There was what I considered pretty nice setting up on UC there. I fell asleep and woke up and it missed it by 0.1 pip or something, which I feel it keeps happening this week.
Do you want to share it?
Yeah.
Go on, mate. Get out your comfort zone, bro. Get out your comfort zone, mate.
It is pain though, 0.01 pip misses, but at least you're not taking L's.
Yeah, that's true. I don't think I've got the right screen. Fuck.
Also, you're probably on the right track as well if you're getting the misses.
Well, that's true. I feel like well, can you see my screen? What screen can you see?
Yeah.
Yeah.
Yeah, you see it, Chef.
All right, right. Sorry, I thought it was just showing my other desktop there. Yeah, so I mean, it came down here. I feel like we were obviously bearish, but with all this kind of imbalance here was kind of what I was thinking.
Yeah.
And then I don't know, it just kind of broke structure up here. Looks like it's going to start going back up. So I would have been kind of targeting relatively short, but looking at that, it would have been perfect.
You got some nice equal lows here as well.
Yeah, there's equal lows that kind of got built here, which are a bit of a turn off, like here. But
yeah,
no, apart from that, it looked all right.
What time frame was that order block on?
That'd be 15-minute, and then this would be on a refined 5-minute. So my 15-minute would have been here.
Go on to the 5-minute. Let's have a look at it on the 5.
Oh, this pear looks tasty, man.
Yeah, so that would have been the order block that I would have chose as well, mate. So yeah, just sod's law. I think that one, mate. To be fair.
The other thing I was looking at, as I was listening to you, I was looking at buy here. It didn't quite tag me, and I thinked out it, and I won't put it back on because I think it'd probably be done into where I'd have broke even anyway. But I was finding it funny because I was looking at UC and UJ, and then I heard you say those are the that you don't trade. I was like, am I getting something wrong here?
Yeah. Go down to the 1 minute on EJ. Is that the one that didn't tag you in?
Yeah. So I think I had a bit here, like 50%. I don't know, the way it's noticing quite a lot of like not getting me, so I think I'll probably just start using a full, and taking the slightly bigger stop loss. But
I would have if I was to have taken this trade, I would have probably looked at this as your breaker structure.
Yep, and then that is your second.
And I'd probably have chose, let's have a look. I would have probably, you broke that bit of structure. There's no, that's the clearest order block because it's got imbalance. There's a tiny bit of imbalance here, but if I was completely honest with myself, I would have probably chose that one. But if I was to take that one, I'd make sure my stop loss is, pretty much where you've got it. So, I would have
actually, I think what I've done here was I took it off the 5-minute, and then it went here, didn't tag me in, removed my order, and then it's come down here, and then that's why I'm like, well, I'm not putting it back on because it's shot back up, So just kind of my patience that got me there. But I went to the 5-minute because I was just like, I don't know, I just feel a few of them are just not tagging that 1 minute, especially when it's like down here, But
are they missing your entry by like a small, like half a pip or something, or is it?
Pretty small, pretty like half a pip, couple of pip here. Like I think it's just probably a bit more work needed done on like the block I go off. Like I think I tend to favour what I believe you would call the extremity, whereas maybe somewhere like here, would that be the decisional? But
in that situation, right? What you could do is you've got an order block here, you've also got one here, right? Both are valid because you broke structure here and we broke substructure here. So what you could do is you could split your risk. You could have one entry on this order block for a 0.25% or half what you normally risk, and then also half here. So if this one doesn't get respected and blasts through, then this one will. That's sometimes what I do. If I'm a bit unsure and there's no clear order block, I'll split my risk across 2 order blocks.
Yeah. I wonder if you were to split the risk, what your kind of turn would be difference to if you just took the first one on and increased the stop loss. Probably work out about the same, wouldn't it? It would depend where they were.
Yeah,
but,
yeah.
You know, so like
Yeah, probably,
if you chose
mate,
that
yeah.
one and then just done that, maybe.
Yeah.
You know, instead of getting tagged out,
the 6 pip stop
yeah.
loss is still a small stop loss, mate. So
As
if it was over 10, then I wouldn't be interested. But a 6 pip stop's absolutely fine.
It's easy to get ahead of ourselves and try and do the smallest possible, and then you realise
you get greedy, don't you, mate? Yeah, we all do.
Do you know
that's a lovely trade idea, though, mate? It's brilliant.
Anthony, do you know on this EQB you've got marked here? Can you just zoom in on that for us, please?
On what? Sorry, mate.
On the equivalent, whatever EQB block, how you would say that word.
This?
Yeah, that's the one. How come you've not chose this white candle here?
Well, because I just had the 5 minute, because that was where my actual entry was when I seen it go off and then I'd closed the order. This was just kind of messing about after the fact to see.
Yeah, I guess you could.
Didn't actually have an entry here, but yeah, you're right. Like, wouldn't hit the 50%, but.
I would have chose the black candle myself.
Yeah, I'd have chosen the black one because the white engulfs it, doesn't it?
Engulfs it, yeah. So you wouldn't be choosing the one that before it, to be fair.
Yeah, I guess it's just that you don't get any breaks here or anything below that, do you? There's no real like.
No, there's no confirmation entry type 2. No.
This is only kind of your second confirmation entry. This would be kind of your re-entry that we're looking at, because remember the initial entry was like here, you know.
Do you wait for? Are you looking for body close over bodies then?
I like it close over with the body, yeah.
So you're more looking at this here as opposed to this here, yeah, or this here.
Well, let me see.
Quite interesting. I've never back tested the whole body thing. What is that? You say it's type? Is that type 2 or type 1? I'm confused now.
So what do you use? Do you use a wick to map and a wick for a wick would be a break for you?
For me,
type 2 for me.
Yeah, which one's that then?
That's a body closure above. Basically, I want to see a body closure above a wick.
Yeah.
Sorry, this just throws out. It seems to do this a lot with the time frames just freeze. Where are we? Aye, sorry. So what we're looking at, this is like kind of the second entry, because the initial one would have been this. So it came in, then came up here, and then this was our for me 5 minute break. So that wee bit, you know, it wasn't where I was really looking at. I was just
that one there as well.
Looking after the fact. What's that? Yeah.
Well, as you break as well.
Yeah, that looks
clean. Really.
Yeah.
Either or, really. Yeah.
That's
so
nice trade, mate. Just a shame it didn't take you in. Yeah.
Yeah, it's only one out of a few errors. I just felt I was taking more trades and more losses than looking at my back test. Now it's obviously from patience, but I think as well just the way I'm marking them up and back testing, because I know I can flick through 2 days and 3 minutes. I'm maybe just looking for more from my live stuff, you know.
You want something to happen, don't you, when it's live?
Yeah.
Like you almost see something that maybe isn't there because you've been watching the chart for the last 10 minutes or an hour or whatever.
Yeah, it's really easy to get caught up in it. I think a bit better lately, just like trying to just set alerts and leave it. And then I think keeping yourself busy can help, you know, like instead of just sitting there waiting on it.
That's why I put that top.
Have you tried reducing your pairs maybe?
I don't know, that was kind of because I wanted to see more. That's kind of why I'm trading that much, to be honest with you. But I'm not really actively in all of these. We're kind of just watching over a lot of things, you know.
Yeah. I just found that when I was sort of looking at 10 pairs in the morning, I was getting stressed and overwhelmed. I was looking at 10 pairs because I knew there's opportunities across all of them. But then when I shrunk it to 4 or 5 pairs, I just became a better trader, more profitable, more focused, got to know the pair movements a little bit more. Something to maybe bear in mind.
So you've not taken anything the last couple of days then, you said?
No, I'm not taking. To be fair, I'm not taking any trade for the rest of the month. I've done 28%, and I've just got my second funded account. So I'd rather just start that second account in January. I'm still looking at the charts every morning and forward testing. If a high probability setup comes up, I'll probably risk 1/4%. But I'd rather just work on refining and testing and get ready for 2021.
Yeah, 20% is plenty, mate. If you're up that. Anyway.
Yeah. Right, should we wrap it up, lads?
Yep.
Yeah. Cheers,
nice
man.
one. Appreciate that, Dan.
Thanks for your help, boys.
Right now.
Cheers.
Yeah, man. Well, listen, good catching up with you boys. Just we'll do one of these once a week or something. If you fancy it, if you took value from it, we'll just catch up and go through charts and all things trading.
That'd be great. Yeah.
Quality.
Cheers, mate.
All right, lads.
Brilliant.
Take
Nice
it easy,
one.
mate.
Cheers.
Yeah.
Speak soon. Bye.
See you later. Bye bye.
Thanks a lot, guys.